All right, guys. Today we got Amazon earnings. One of the biggest earnings reports of the week, really. Probably the biggest one. Today we also have Snapchat earnings and a bunch of other ones. But yeah, this is one of the biggest ones. All right, guys. So yeah, Amazon flying up today. I'm not gonna say I told you so because I told a lot of people today and yesterday when they were being all doom and gloomy that the market probably wasn't about to crash, and yet they still show up today, this morning, and try to act like they were right. And so my Disney trade is looking lovely right now. Lovely right now. If you guys remember, I bought Disney yesterday, I think yesterday morning, and I bought it at like 96. Disney just tapped 100 basically just now. I bought Bank of America yesterday. I bought Wells Fargo yesterday, and they are all very green. You love to see it. I'm basically scaling out of Disney right now. We got like best case scenario here for Disney. So somehow we made all our money back that we lost this morning on Crocs uh, just today. So good. Hey, what's up, Doug? What's up, Kay? James? Shepherd. Yeah, Amazon earnings today, guys. Like we always do, we're gonna do a poll here. Let me know what you guys think. Snapchat earnings are also today. All right, guys. Are you bullish or bearish on today's? Are you bullish or bearish on today's Amazon earnings report or call? Yeah, we're also gonna do a Twitter poll like we always do. There we go. Are you bull or bearish? Vote on the poll. We're gonna get our Twitter poll going live as well. Yeah, and again, I'm gonna bring attention to this latest YouTube comment that I just got. I made this Twitter post because of this comment, and I want people to really see it. Okay. Somebody said this. Somebody said, quote, in my comment section. And honestly, people think I'm just like ragging on bears all the time. I'm really not. Like, I'm not trying to like talk smack to bears. What I'm telling people is to stop sensationalizing the market. This guy says it's funny rewatching this stream replay to see so many people wrong in the chat about how today would play out. Either shows how unpredictable the market truly is or just how wrong people on the internet are. Absolutely, man. I was telling the doomsday, whisperers, I call them doomsday whisperers. I was telling them this morning, uh, the market didn't have to crash. Everybody was acting like the market was just done. It was toast today. And again, the market ripped up, Disney ripped up big. SPY hit 412s just now, 413s. And my response to them is me trying to explain why I'm so critical on people sensationalizing. My response to them is saying this person, felt this way after one day of watching like the crash whispers in chat this morning. Imagine doing this every day. Yet the same people, imagine experiencing this every day, where you get people in chat saying, "Yeah, the market's going to crash today." They're calling bulls names, they're making fun of bulls, they're calling bulls idiots and all this stuff, right? Now imagine having that happen almost every single day. Yet the same people still come back to the stream and try to claim that they were right and somehow I was wrong when the SPY drops 1%. Like after a while, it's just kind of, man, you love to be right here. I gotta rub it in their face a little bit. That's all I'm doing today, guys. I hope you understand. If y'all were me, y'all would too. To be honest, at a certain point, people got to stop sensationalizing the markets. Whoever's trying to say that is not Michael Burry, and the market does not care. Uh, Another thing is like we don't have to hit a recession. That's another thing is like people are like, oh, well, the recession's happening. Not necessarily. Was it good that the GDP quarter over quarter came out at 1.1? I mean, define good. Right now, we're in a middle. We're in a market that fears both inflation and a recession, and so the market coming out GDP at 1.1%. It's still positive. It's not like it's losing GDP growth here. You know what I mean? Like we're not negative in GDP growth. We're still 1.1%. And so I guess the point is everybody wants to be Michael Burry. Not many people actually are. And it's important for people to understand how the market really goes, which is that generally long term, the market's going to go up. The market is already down drastically over the last couple years. And that bearish action is not going to continue forever, and so telling people the market's going to crash every day is making people miss out on the biggest long-term edge the market gives you, regardless of whether crashes happen in between, which is that long-term, the S&P 500 is going to go up long-term. And I don't like definitive statements. It's almost certainly going to go up long-term. That's an easier way to put it. But yeah, again, maybe we're going to get the opposite of what we got yesterday. What we got yesterday was bearish action all day, and then earnings came out and kind of saved the market and let it bounce back. Maybe we're going to get the opposite of that today. Maybe the market's going to run up all day, and then Amazon's going to come in weak. I don't think Amazon's going to be weak. I think Amazon's going to do well for their earnings report. But who knows? Again, maybe I'm wrong here for sure. Yeah, for sure. I think based on today's data, the Fed can hike rates again. Maybe. Market is just ridiculous. Hey, bro, market is flying up, dude. And again, I think it's important for people to understand how the market really goes, man. Again, if you watch some of these YouTubers out there just posting, market's going to crash every day, you might think it actually is going to. That might start to wear on your sentiments a little bit. And again, despite how much heat that I've gotten for being a bull and all of the stuff that's going on, no matter what they want to say, I have been absolutely correct about all of this. Like I have been without question correct in telling people that the market didn't have to crash and the market might keep moving up. And so, yeah, again, we'll see what happens. Listen, if the market gets over 420, we will be green over the last 52 weeks, green over the last year. So again, we get over 420. We get over 420. We're at 412, almost 413 right now. We're getting about $7 away on the SPY. We will actually be green over the last year, which is a great sign. Great news. Hopefully, we get that. But yeah. Yeah, I think yeah, exactly, PPU. I think considering how rough their EPS has been and how high their PE ratio has been over the last year, over the last couple months, last quarter at least, I think they're going to do everything they can to have good margins and good numbers this quarter. Is what I think. And so I think Amazon will probably do well this report. But again, understand, guys, and remember, it is an earnings report, so nobody freaking knows what they're going to do. Nobody knows if they're going to come in up, down, sideways, positive, negative, better, worse than expected, good guidance, bad guidance. Nobody knows. All speculation. I think there's a solid chance we come in better than expected. But again, nobody knows here. And the other nuance to it is that they're up so much already leading into it that extension might weigh in on it, even if it does. A lot of companies, I'll put it this way, a lot of companies have been posting better than expected numbers and then dropping. Caterpillar this morning is a good example of that, although Caterpillar eventually rebounded and filled the entire gap down that it did heading into the close. Crocs. Good thing I didn't buy Crocs, but Crocs dropped from 150 down to 120. Huge drop. Crocs basically dropped 20% today and then rebounded back up to 125. So Crocs is down big. Yeah, for sure. You never know. Again, I don't want people listening to me. I have no idea what I'm talking about. I might be wildly wrong about anything and everything the market does here today. I truly might be. Again, if I have a catchphrase, it's I have no idea what I'm talking about. Don't copy me. Amazon ripping up. FRC starting to pull down a little bit though, guys. That might weigh the market down. Again, watch FRC right now. I'm not saying it's going to, but pay attention to it. All right, guys, we're gonna get a poll going live. All right, guys. So beat or miss? Beat, miss, as expected. We got. We're gonna put this poll go live at 2 hours. Hey, baby. Okay. All right, love you. All right, y'all can do me a favor. Hit the like button, guys. Hit the subscribe button as well. Yeah, Apple, huge rip. Got this poll going live here. Vote on this poll too. In line. Yeah. Saw the same complacent behavior at August top. Yeah, but it's not complacent, man. Again, it's not complacency. What it is understanding like bears are going to be wrong a lot. And again, generally the people that are shaming people the most are the most wrong. You know, again, we had some guy here. Here's an example of this, right? We had a guy here yesterday, and this is a guy that basically said the market would crash 3 months ago, and then he basically didn't come back to the stream. I'm pretty sure he's creating alt accounts and just getting kind of weird, you know. But 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 this is a guy that hadn't showed up for 3 months, and the last time we saw him, he was like, "Oh, the market's going to crash. You know, sell everything now. The market's going to crash." Basically, is what he said. And so if you look at the market over the last 3 months, the market has pushed up huge amounts. You know, since he said that, huge amounts, right? Yet he comes to the stream yesterday and he says, "You haven't learned anything." So condescending. And I'm just kind of like, I had to kind of bring attention to it and be like, bro, you said the market was going to crash in January. Like, what happened, man? You know? And so I guess at a certain point, you got to, I'll respect anybody. Like, okay, here's an example. I bought FRC at 11. The next day, somebody else said, "Hey, John, you were wrong about FRC." I said, "Absolutely, I was wrong about FRC." That was one of the trades I was the most wrong on, you know, over the last couple weeks. Absolutely, you know, I would respect bears a lot more. Not all bears. I short all the time, so it's not like I'm just anti-bear or anything. But I would respect the bears who were like that in the chat a lot more if they were just kind of like, "Yo, I was wrong short term," you know, like a lot more. But it's never that. It's always kind of, you know, it's always either, well, the numbers are wrong, the market is wrong, and the market's never wrong. It's just mass psychology, you know. So it's not like the market isn't about only company health. You know, if it was, it would be really easy to make money in the stock market, and it's not necessarily. But the market is about mass psychology, and so in that, sometimes psychology is difficult to predict, and I think you got to look at it objectively. But yeah, SPY with a huge rip, huge green move today, guys. Huge move. Oh, it'll crash. But the people who lose the most are people who sell in that crash. You know, I'll put it this way. Yeah, for sure, Jay. 100%. Jay says, I saw a lot of people say they were going to go all in and puts this morning. I hope we talked them out of it. I don't try to talk anybody in or out of anything. I just try to be honest with people, which is like tell them, hey, look, like a lot of the guys, uh, I just try to tell them, like, hey, look, a lot of the guys that you are following, uh, there we go. I just try to tell them a lot of the guys that y'all are following that are telling you the market is going to crash every single day are doing it to get views, you know? And so I think once you understand that side of it, you start to become a little bit more skeptical of these big parabolic crashes happening, and you start understanding like the general flow of the market. Yeah, looking at our poll numbers here, we did a poll about Amazon. About 67% of people think they're going to beat on Twitter. 33% of people think they're going to miss, and no, they come in as expected. Looking at our YouTube votes, we got about 100 votes. 68% of people are bullish. 32% are bears heading into the Amazon earnings report. And yeah, we'll see. Remember, GDP data did come out today. Hope you're right. Yeah, I mean, at this point, I'm not hoping. Like I've been right over the last 4 or 5 months. Like pretty obviously been right. Um, yeah, and again, I'm not trying to toot my own horn. I mean, I guess I am a little bit because, and if you guys were me, y'all would too. Like if you've been sitting there kind of defending the bull side and having bears called names and stuff like when the market rips up like this, you're gonna be like, well, but at the same time, though, I completely understand. I completely understand that the market could certainly crash. It's not like I'm saying the market's not going to crash, because it certainly could. Um, all I'm saying is like it doesn't have to, and I've been saying the same thing for a year now. It's a tough thing to call, John, and you get it right a lot. That's why you're top three. Hey, thank you, man. What are your opinions on the earnings report? My opinions are this. Like, I'll look at the data here. Like, we can take a look at this just so we can kind of see. I like looking at the EPS graph here. This is something I generally always try to look at is the EPS graph. So here's the EPS graph for Amazon here. If you want to know why their PE ratio is so garbage lately, it's because of this. They've had a couple losing quarters. So Amazon doesn't even have a normal PE ratio. And so I think because they've been so weak over the last trailing 12 months, they got a trailing 12-month EPS of minus 27. I tend to think they're going to do well, this EPS. I think they understand how important this report is. And so I tend to think they're going to do well. But of course, anything could happen. At the same time, despite all of the bear action in Amazon, it doesn't really matter, to be honest, because look at their 20-day graph here. Their 20-day graph is, they're up 10% in the last 20 days. Yeah, you look longer, we can look at a 90-day graph too and see a lot of bull action. 90 days ago, they were at 80s. They are now at 110s. So, yeah, they have basically moved up 25% in the last 90 days. Amazon has 25% in 90 days. So, I mean, in that, again, I think it's important to understand where we are, understand that, like, even if they don't go up from earnings, they still had a very strong couple months. And so, it's not like if they come in underwhelming here, it's the end of the world. I think the biggest hit that is going to make to them if they do come in under expectations today is confidence, trader confidence. I think investor and trader confidence is going to go way down if they miss today because they've had such a rough 12 months. But it is Amazon. It's a behemoth. They're huge. So it doesn't really matter that much, I think. I think people still use Amazon all the time, every day. And so I don't think that matters. I don't think it's make it or break it, but I think it's important. So we can look at this one more time since somebody's asking me to look at it. Here is the quarterly EPS. Last time 3-cent profit per share. Last time time before that 28 cent. Time before that minus 20 cents. Time before that minus 38 cents. Trailing 12-month EPS is at minus 27 cents. Again, big report today. We can also look at their revenue graph. Is the second one I'll look at. So this is a company called Macro Trends. I'll put the link up in the description or in the chat if you want to check them out. They're not a sponsor or anything, but just genuinely useful company. Now one thing that hasn't taken a hit. Amazon has made some risky investments. That's why their EPS has taken a hit. At the same time, their last revenue was the highest revenue the company had ever done at 150 billion in a quarter, which is just huge, absolutely huge revenue. I guess like when you think about these conventional metrics for Amazon, you see Amazon right here. When you think about these conventional metrics, the thing to understand about them is that EPS is a gauge on profitability. So high EPS is good profitability. Low EPS relative to expectations is bad profitability. And that's kind of what they're in right now. Again, they made some risky investments on Rivian that kind of started the year off pretty poorly last year. And that is what kind of drove the bad EPS year. Is the Rivian billions that they lost in it. But that's not normal business as usual for Amazon. And so again, I do tend to think they're going to do okay. If you look at their revenue had a great year last year. So they're bringing in good money. So like EPS is profitability. Revenue was like profit ceiling, like profit potential because of, it's basically how much money they're bringing in. And they're bringing in a lot. So I don't think that matters too much. If we look at the actual expectational numbers here for Amazon, I don't really like, bro. This site I'm using for earnings is always kind of slow. What's your favorite earnings website? There we go. All right, so Amazon expecting 21-cent profit on 124.47 billion in sales revenue. So we'll put this up on screen. Amazon is expecting, again, 27-cent EPS on 124.47 revenue. And these numbers drop right at 4 p.m. Eastern Standard Time. We will stream the full report plus call live right here. All right, guys. We're going to put the expectational numbers up on screen too so you can see them. Bears about to get wrecked. They already got wrecked, bro. Again, drops at 4 p.m. Eastern Standard Time. Favorite earnings website, your live stream? Hey, we appreciate it. Again, we just kind of been scaling out of everything today. We took some more off on Disney here. We took some more off on Bank of America. Wells Fargo, we're going to let that one work a little bit more, maybe add to that one. That's the one kind of bank lagging stock. If you guys want to see, like, these are all the trades I bought. So people act like swing trading is not profitable. All right. So like, let's take a look here. Here's my Disney swing. We're holding 5 shares left. You can see we're up about $190 in about a day on this swing trade. Wells Fargo, we are up a small amount. That's kind of the one lagger. Bank of America, we made about $30 on this trade. And so we're up about 220, 230 on our swings, basically overnight. Again, these are my favorite swings to get involved with. I wait for weak markets that are having extreme pullbacks that in healthy companies, and I buy those dips. So Bank of America, Wells Fargo, Disney, all pulled back really, really heavy yesterday, and we bought them up. And again, we made pretty decent little gains here pretty fast. But again, swing trades can be powerful, you know. And again, I don't go for super huge home runs, like just little base hits on everything. The ones that I'm the most confident in, like Disney's bounce, and I was absolutely right about Disney's bounce. It's almost up to 100 today. I take a little bit larger size. The ones I'm the least confident in, like Banks, I take smaller size, of course. But again, they do add up. They do add up. Yeah, for sure, Scott. 100%, man. Yeah, it varies depending on the source. They would get more wrecked. Yeah, we'll see. All right, guys. So looking at our Amazon numbers here, 57.5% think they're going to beat, 33.5% think they're going to miss, and 9% think they're going to come in as expected today. Again, we'll see. Whew, man, Disney, man, what a great trade. Again, if you want to see the trade here, uh, like, look, like these are like you want to see exactly why I take these swing trades. I think I made even more than this, but like, look, I'll show the trades on Disney. Um, but yeah, you know, again, we start to load into there, we add to it. Look at that. You love to see it too. Just quick little gains. And we're still holding a little piece of it too. But you love to see it. Love to see it. Let's see if it keeps going up. Yeah, I don't know buy or sell. I don't know, man. Why is Amazon laying off workers? Probably because they've got so much. They want to do well with it regards to earnings. All right, guys. So again, look at Disney, man. Just can't hold it back up to 100. Again, I'm gonna go ahead and cut the rest of it. I think up here. I mean, I don't think I necessarily want to hold it through. Yeah, we're out. We're gonna go ahead and just cut the rest and just be done with it. Beautiful trade. Love to see it. Again, Bank of America. I'll sit on this one a little bit longer. But you know we're already up so much. Take a little piece of it off now and then lock it in, and that way we don't have to worry about it. What do you think of PayPal and its future? I think its future is questionable. The reason I think I think people will still use it, but I think as crypto becomes more and more efficiently used, I think PayPal might go bye bye. But I don't know. Who knows? Maybe I'm wrong. Rather be holding Amazon than Mullen? Well, duh. I'd rather be holding, a pound of gold than a piece of horse poop. You know what I mean? That's basically the correlation there. Best analogy I can give of that. Of course, you'd rather be holding Amzn than Mullen. FRC at 615s. Again, we'll see if it bounces. Yeah, the dollar's going to be getting wrecked. Dollar index is going to go down when the market goes up. How does one practically use a currency as volatile as crypto? Well, through Tethercoin. I can send Tethercoin. Okay, I'll put it this way. Tethercoin is already arguably more efficient than PayPal is. Okay, the reason for that is because I can send 1,000 Tethercoin to somebody for $3. Right, that's 0.3% versus PayPal taking 4%. All right, so Tethercoin is already arguably more efficient than PayPal. Bear Karen. We can call them Karens. I like that. I call them doomsday whispers because they're in here every day saying the doomsday is here and it's never here. And maybe it'll be, I don't know, but again, I just see it so much that like eventually it's like, all right, well, they've said it so much that I'm just highly skeptical of everything now, Well. I'm worried about someone buying something from me for 1,000 worth of bit, and next week it's worth 900. Yeah, but then you're not understanding what I'm saying though. 75. What I'm saying, okay, like what you need to understand here, brother, is that we're not talking about Bitcoin, dude. Bitcoin is way too volatile to do that, of course. Like Bitcoin, but Bitcoin's not meant to do that. Bitcoin, to understand the crypto universe, okay, you got to understand the different types. Okay, Bitcoin is the equivalent of like crypto gold. Like in terms of volatility, Bitcoin's like gold, right? It's volatile. It moves up for the most part over time, but it's pretty volatile relative to like, the US dollar, which, what I'm referencing is Tether coin. It's coins that are specifically meant to mirror the US dollar. And so, 100 Tether coin is basically $100. And I can send 1,000 Tether coins to anybody and they can sell it for US dollar for about $3. So in that regard, it's already more efficient than PayPal. Man, what a day, guys! What a day. We're gonna put Amazon up here, and then we also have Snapchat today. Snapchat's the other question mark I have for today's earnings. Snapchat big green day today. What do you guys think? Snapchat is expecting 1 cent loss per share on 1.01 billion in sales revenue. They drop at 4:10 Eastern time. Intel at 4, Pinterest at 4:05, Net at 4:15, T-Mobile at 4, US Steel at 4:15, First Solar at 4, Gilead, Amgen, Cap One at 4:05, Skechers at 4:05. That's basically what we got right now. All right, look at Snapchat rising here though. So Snapchat's going up. All right, guys. Yeah, Snapchat up to 1050s, 1050s. All right, guys. Snapchat rising here. Again, Amazon at 109.70, 109.70. Do all gaps get filled? Not always. No, I don't have any Snapchat. I sold Snapchat a long time ago. Hey, what's up, McKean? Yeah, McKean, I actually shared your post on Twitter because it's absolutely hilarious how many doomsday YouTubers come into my stream. Again, we made this Twitter post, and honestly, I couldn't help myself by making this post because honestly, understand how you feel today, McKean can tell, right? How you see everybody, you come to the stream and you watch everybody, not everybody. Okay, let me rephrase. You watch a lot of people be like, oh, the market's crashing, the market's done. You know, they're condescending, they're disrespectful. They're saying the market's done, the market's crashing. They're making fun of long traders, they're making fun of bulls, right? And then the market just flies up in their face, right? They fly up in their face, you know. And so, of course, you say, quote, it's funny rewatching the stream replay to see how many people were wrong in the chat about how today would turn out. You know, absolutely. Now imagine having that happen almost every single day. Yet the same people come back and still are condescending, acting like they were right and I was wrong. It's literally mind-boggling, dude. It's freaking crazy. Honestly, bears just don't want to be wrong. But again, I'm not saying we don't crash, but man, is the market not crashing right now. Um, again, man, is the market not crashing. A little over pompous. I mean, yeah, but that's kind of my trading personality. Is top three greatest ever. I mean, listen, if you were the top three greatest of all time and everything ever, ever, you know, you'd be a little, you know, or maybe you're not talking about me. You might be talking about whomever that I'm talking about. And again, the crazy thing is like I'm not hating on bears. I short all the time, right? But what I don't do, and again, I said this earlier, what I don't do, I don't make definitive statements unless we're talking long term and like the S&P 500. Like the S&P 500 is going to go up long term. You know, that's not arguable. At least over the last century. So it'd take a huge rarity thing to occur. Um, but I don't make definitive statements. I don't shame people for being the opposing direction traders, you know, because I short and go long. I'm a little bit of everything. I mean, again, I showed you guys my trade. I made, you know, hundreds on Disney. I made good money on banks. I bought the dip yesterday in both of those. Loving life right now in those trades. Made two something pretty quickly over the last 24 hours. Right, 100% Kim. Kim said it. Kim hit the nail on the head. Where I learned last year when they say the market's going to crash, I'm buying stuff up. And that's exactly what I did yesterday. Again, I just cut my last Disney trade. But again, if you want to look at Disney, we made a couple hundred from Disney, a little bit under that. We made 180, but we actually made more than that because we took profit yesterday too. So we took profit in after hours yesterday on the bounce, and so we made money on Disney. We made money on Wells Fargo. Wells Fargo were pretty flat in actually, but we already scaled out of essentially all of the trade on Bank of America too. And Bank of America ripped back up and we already took profit there. And so I did buy a lot of the dips yesterday because the dip buys are just profitable. But yeah, here's Snapchat. I know, and here's the thing though, AJ. Ajax says bulls are the arrogant ones. I'm not trying to be arrogant, man. Again, who's arrogant in this situation? One side is calling the other side names, calling the other side idiots, making fun of them. The other side just saying that they think that they're wrong. And when they are wrong, rub it in their face a little bit. In my opinion, the arrogant ones are the other ones, the people calling people idiots for being on the opposing direction. Like, that's arrogance to me. Uh, I'm just kind of rubbing it in because I was right. And that's pretty, I'm just kind of horsing around, of course. Chipotle overpriced. Don't talk about Chipotle like that, bro. Uh, I thought EPS is 21 cents. EPS for Amazon, I'm showing is 27 cents, but it varies depending on the analyst. Oh, yeah, you're right. It actually is 21 cents. You're actually correct. My apologies. Let me fix that. I actually have that wrong. There we go. Yeah, the interesting thing about Amazon is, again, Amazon has had a rough year with Rivian losses, with a lot of stuff going on. So Amazon has had a really rough year here. Now, the question I have moving forward from this is, like, Amazon has had a rough year. Um, I think there's an argument that Amazon does well on this earnings report, yet we don't see some type of huge positive reaction because of it, because they're up so much already. I think there's an argument for that. Again, I'm not saying that's going to happen, but I think there's an argument for better than expected EPS and sales, yet not the biggest bull reaction. I think there's an argument there. And again, I think the argument is there because we're extended on the upside leading into it. But I do think there's a chance that Amazon's going to do everything they can to have good EPS, good sales, good guidance projections. I think they're going to try hard to put in good numbers today. But again, who knows? Yeah, but McKean, look at my Twitter account. I posted this today because it's honestly so true, man. It's so true. And people wonder why I rant about it all the time. It's because, dude, it happens every day. Yet the same people still come back and they act like they're right. uh, they drop at 4 o'clock. They drop in 6 minutes. Yeah, we'll see. 20% drop is going to fly the market up. And again, if the market breaks 420s on the SPY, then they're actually going to be green on the year. So if the SPY breaks over 420, it will technically be green on the year. All right, guys, we got 5 minutes. 5 minutes before the data comes out. Be careful, team. Are you considering buying the dip in ENPH? So that's solar power. I don't know. I think there could be an argument for it. Let me look at the EPS ratio for ENPH. So the EPS ratio of the ENPH is about 47 or 48. That's still pretty high. So no, not really. No, EPS is just a little bit too high. Like Disney EPS was about what, like 25, 30. So that's a little bit more reasonable of an EPS dip. But with regards to ENPH, it's just too high. 50 is almost 2 times what I want it to be. Long-term bag holders of bad stocks are usually bearish. They just wish people lose money like they did. Yeah, I feel you. I think a lot of people are. I think, like, oh wait, there's no music playing. Oh man, dude, I've been rocking out all morning. Not even y'all aren't even listening to music with me here, man. Thoughts on PayPal? I already talked about PayPal. All right, guys, we got 3 minutes. 3 minutes. Yeah, thanks, revenue. Hey, man, I watch your stream every morning, every earnings play. Respect your grind and openness about the markets. With that being said, what do you think about the anticipated move? What do you think the anticipated move is in either direction? Well, honestly, I think we're probably a little extended on the upside now. And so I think even if Amazon comes in positive with earnings, they might not make as bull of a reaction as people think, because, again, we're just so up today. We've given back all the losses that we put in yesterday in the market, plus a little bit of gains. And so I think in that regard, like, I think there's a chance Amazon beats and then still drops a little bit, or doesn't, or stays choppy or slight green. But who knows? Yeah, and again, I have no idea what's going to happen. We're essentially just guessing here, based off of extension on technicals. So again, I really have no idea. We'll see. Good luck. Appreciate the support. Yeah, guys, 2 minutes. This report drops exactly at 4 p.m., Oscar. So this one comes out exactly at 4. And again, we are going to throw this one in sub-only mode. So if you haven't already, hit the sub button, guys. We appreciate it. Subs of any duration can chat. So sub, hit the notification bell. We appreciate it. 8% on Amazon for implied volatility. Yeah. Again, a little bit too extended on the upside. I think a pullback could be interesting. But again, I'm not taking it. I think it's too risky. Snapchat also comes out at Snapchat drops their numbers at 4:10 p.m. So Snapchat at 4:10 p.m. for their earnings. Hey, what's up, Jonathan? Yeah, good luck, bro. 25% of my money is in Amazon. I'm nervous. Hey, be careful, man. You know, again, Amazon's up big. So, I mean, anything could happen. Generally, if I'm in a trade, I take profit, at least some of it off. I don't take like full profit, but I'll generally take at least some of it off. Intel. Yeah, so again, today we have Intel, Snapchat, Pinterest, Amazon, Cloudflare, T-Mobile, US Steel, all about to drop in about 30 seconds, team. A little bit less than that, actually. All right, guys, y'all be safe. Good luck. Remember, hit the live button next to the play button to make sure you're caught up on stream. Hit the live button next to the play button to make sure you're caught up. All right, here we go, guys. All right, so there is the release here. No movement yet for Amazon here. No movement yet for Amazon. Watching it now, right around 110s. No release yet. Snapchat hasn't really moved much. Again, no move yet for Amazon. Starting to move up a little bit for Amazon at 110s. 110.40s, 110.50s, 110.60s, 110.80s. Taps 111s. Big volatility moving here. I don't see anything yet with regards to that, to them. 111s. Again, I don't see anything yet here, team. Amazon first quarter sales 127.4 billion, 127.4 billion. EPS at 31 cents. Better than expected EPS, better than expected sales. And man, I was wrong. They put a huge pop up. They see second quarter guidance at a 127 to 133 billion. So again, better than expected EPS, better than expected sales here for Amazon. Huge moves up. We'll get this up on Twitter. Again, Amazon first quarter EPS showed up at 31 cents a share, 31 cents a share versus 21 cent estimates. They are loving life right now, up to 120s. Snapchat also out with their numbers here. Sales came in at 127.4 billion. We're going to put these numbers up on our Twitter page. Huge rip-ups. All right, huge move up to 120s right now. Snapchat. And again, we'll put this data up on screen here for you. Data's up on screen. Better than expected EPS, better than expected sales. Good guidance too. Amazon just hit 120s right now. 120s for Amazon. Market's loving life at 413, 50s on the SPY. Amazon flying up. Snapchat here, guys. Snapchat. Amazon Web Services numbers came in at, we're going to drop all this data. So again, we got a lot of stuff to cover here. So bear with me. Amazon first quarter product sales, 56.98 billion. First quarter service sales at 70.38 billion. Second quarter operating, 2 billion to 5.5 billion. Segment sales, 29.12 billion. There's Snapchat rip. Again, I don't see Snapchat. I think Snapchat might just be moving up with Amazon, but maybe Snapchat numbers are out already too. I don't know. If you, we'll have to look at Snapchat, but Amazon out with their numbers. Amazon making cuts. Again, Snapchat flying up to 1080s here, maybe up on sympathy. 122s just tapped for Amazon. Amazon sees second quarter net sales at 127 to 133 versus 129 estimates here. And so again, better than expected guidance numbers too. We'll add this to the metric here. But yeah, better than expected guidance too. Up on screen right now. Snapchat still waiting for them to drop. Intel posted 4-cent loss per share versus 15-cent loss estimates. Revenue of 11.7 versus 11 estimates. So Intel beat on both metrics as well here. Here's Intel right there in the chat. Again, Snap isn't supposed to drop theirs until about 4:10 o'clock, 4:10 market time. All right, baby. Love you. All right. SPY at 413s. So SPY loving this, obviously. Still waiting for Snapchat numbers to drop, but the SPY is up big on this data too. T-Mobile, 158 EPS on 148 estimates. Revenue of 19.6. Better than the 19 or missed the 19.8 estimates. Again, Amazon just broke highs again at 122.50s here. 122.50s for Amazon. Wow. Huge rips. Again, Snapchat drops theirs in about 5 minutes here. Stick around. Snapchat in about 5 minutes. The revenue came in at 127.4 versus 124.5 estimates. Again, this is good for the whole market. Amazon's number 3 weighted on the S&P, so this is great for the market. I'll look at a lot of different places and just see which one shows up first. Snapchat's still pulling back again. Intel dropped. What about Pinterest? Let's look at Pinterest. I don't think Pinterest is out yet either. But better than expected so far for Amazon. Here's Pinterest. Pinterest not out with theirs yet. They might be waiting for... yeah, Pinterest doesn't drop until 405, which is right now. So Pinterest... Amzn posted 398 versus 385 estimates. So better than expected EPS. Revenue came in light, though. Amazon popping up to 122.40s, 122.60s. Snap's not out with theirs yet. Not that I see. Snap's consolidating right now, but they're not out with theirs yet. I'm going to go see what my dog is barking at, guys. Dude. Sorry, my pool guy is here. My dog is just freaking out. All right, Cap One just dropped their data. Cap One came in at 231 versus 292. Cap One with a huge miss for Cap One. So I'm sure Cap One is tanking right now. Look at Capital One. Amazon just broke highs again at 122.60s. Cap One just showed up. Huge miss. I'll put these numbers up in chat. Yeah, Snap's not out yet. Cap One missed on EPS, missed on sales, and a big miss too. Cap One missed by about like what? Looks like Cap One missed by like 30 to 40% in EPS. Revenue came in light too, about 10% light on EPS or on revenue. Gilead came out with their numbers too, but yeah, look at Cap One fall here. Again, Snapchat still not out with theirs yet. They're supposed to drop in about 3 minutes here. And again, we will be streaming the full Amazon earnings call. Again, Amazon earnings call is going to be streamed at 5:30 actually. Okay. Snapchat bopping up a little bit. Amazon up there 123s here. Yeah, I mean, again, I think Amazon's up a ton. Their PE ratio is what stops me, you know. And so I thought they would beat. I just didn't know how much they were going to move up. But it looks like they just kind of proved me wrong here and just flew up. Didn't even matter. And that's all right. Like I said, it is Amazon. And so, yeah, definitely wrong on that one. But, you know, again, it's not like I lost money on it. I just didn't take it, you know. Pinterest tanking. Intel report's already out. Yeah, Pinterest down to 2460s. Pinterest has monetization problems too. Snapchat's supposed to drop their results in about a minute, 1 minute. Hey, what's up, Rin? All right, guys. Amazon at 122s. Pinterest tank. Snapchat should be dropping theirs in about 4 seconds. Okay, let's look. All right, there's Snapchat's time. Snapchat with a huge fall down to $10, 980s. Snapchat, Pinterest dropped 8-cent profit EPS on 2-cent loss estimates. Big drop in Snap, all the way down to 9s for Snapchat. Snapchat just tanked all the way down to 9s. Let's see what Snapchat, Pinterest. All right, Snapchat's out. Revenue 989 million versus 1.1 billion estimates. So light on revenue for Snapchat. Uh, 21-cent loss per share versus a expectational number here of, or no, I think they ended up coming in as expected for EPS. They did non-GAAP diluted loss per share. They had 1 cent profit, but bad revenue. So their revenue came in light, but I think their EPS came in neutral for Snapchat. But yeah, Snapchat's dipping down heavy here. I bought 25 shares in Snapchat. Small. All right, so yeah, Snap came in. We'll put this data up on screen. All right, we just locked in a little bit of profit, and now we can let the rest ride. Pretty easy. Got ourselves to green on the day too, man, after a pretty crazy few days. But we did get ourselves to green on the day, so hey, we'll see what happens now. Yeah, Meta flew up today too. All right, so now we got a little cushion on the trade. We'll let the rest ride here. Amazon's still up there to 122s. Yeah, generally I like buying Snap after it has big pullbacks. It doesn't always work, but we're already, we already took profit. Yeah, you love to see it. And if you haven't already, check out our sponsor, Top Step. They are a sponsor. I'm certainly biased in their favor, but like if you want to trade these big economic releases here, team, here's the E-mini, and you can kind of see a very similar thing to Amazon right now. It does a very similar thing, and you can day trade this left side here with no PDT rule. This is the S&P 500, essentially in futures. You can day trade it, short it in futures, no PDT restrictions. Top Step is the most legit futures funded program in the world. So what they do is they give you a demo, they test your skill. If you could pass their testing, you have to hit a profit target. The base one, you got to hit 3K in profit on a demo account without losing 2K total or 1,000 a day, which is a reasonable ratio. And there's a bunch of different packages, but just taking the challenge builds your skill. Most people are going to lose because most day traders lose, but it's a lot cheaper to lose a Top Step account. And if you can pass the testing, you get 90% of your profit moving forward once you pass it. And so very reasonable, funded account program. Again, I am biased though. They sponsor me, so they pay me money. There's no PDT in futures, so you can day trade essentially the S&P 500. You can day trade currencies with no PDT restrictions in futures. You're not going to be able to day trade individual stocks, but again, that doesn't really matter too much anyway. All right, so again, we took a little profit off of this. We'll let the rest roll now, and we'll get out break even if it doesn't work. Yeah, Snap's out. Snap did 1 cent profit versus 1 cent loss estimates. I'll put the numbers up on screen. Yeah, there's the Amazon numbers in there. We also put the Snapchat numbers up in chat. Pinterest is a pretty big dip too, but I don't like Pinterest as much. The only thing Snap's got going for it, like one of the big things is like Snap has hundreds of millions of daily active users. Like if you look at Snap's report here, daily active users is up to almost 400 million. It's at 383 million daily active users for Snapchat. I mean, they're not providing guidance, which is one of the reasons they kind of went down. But their daily active users is pretty much flat, but up 13% or up 15%. It might seem easy, but that's not easy money, James Bond, So now the question is, like, we're still green on Snapchat. We took profit very quickly on the bounce. The question now is, do we add or sell? Or just hold break even? I think I'll just hold break even. SPY looking pretty strong too. Is there any big news coming out tomorrow? Yeah, tomorrow is PCE data. So it's a day trading platform, Island Time. So you can essentially day trade, but you have to cut your order by like you can day trade, but you got to cut your order by close, basically. Do you think Amazon stays up there? I don't know. I think Amazon's a little extended up there. So I don't know. I think it could, but it also could pull back a little bit. Yeah, so we got PCE tomorrow, which is a really big inflationary metric. The PCE data is what the Fed actually uses to determine how bad inflation is. All right, so we're basically flat on Snapchat. I'm going to buy up a little bit more, I think. Again, I've got a little bit of an edge in that, like, I'm not down too much. 20 shares isn't going to kill me. And I think I can choose to add to it if I want to. So yeah, I just added a little bit to it. Yeah, I tend to agree with you, L7. I don't know if it's going to hit 80, but I'll buy a little bit of it with small risk and see what happens. Again, don't copy me. I might have no idea what I'm talking about. Be wildly wrong about anything and everything here. So yeah, do not copy me. But yeah, I bought it. A little bit of both, Chef. But I have this kind of mixed style of trading where I do a little bit of both. I'll swing trade. I'll invest, and I'll buy up stocks like this. And if they go in my favor short term, I'll cut it and take profit. But if if I need to hold it long term, depending on what stock it is, Snapchat's a little bit riskier, I think. But like Disney is a better example of this. Like I'll buy Disney if it goes in my favor short term, great. If not, I'll sit on it for a while. Yeah, I don't know. I heard Snapchat's AI was not super impressive. So I heard Snapchat's AI was not super impressive. I don't know, but I heard it wasn't the most impressive thing. You know what I mean? Yeah, Intel beat on both. Still put in a loss, but it still beat the expectational numbers. All right, Amazon's starting to give it back a little bit. All right, guys. So yeah, again, getting a pullback at Amazon, not unexpected. I didn't think that I mean, we ripped up huge, but again, I didn't think we would actually hold it. Again, I think we're already up so much already short term that there's risk. Hey. All right, guys. So again, Amazon flying up today. We bought a little bit of Snapchat. We're still slightly green on this trade, but it's not like a huge trade. And again, these are the type of swing trades where I'll take little small positions and just kind of chill and wait. And again, I don't know what we're gonna get in this way. Like, I really don't know what kind of market we're gonna get right now. I do know the market has pushed up drastically today after yesterday's weakness. So again, I don't know what we're gonna get. Wait, what happened to my music? Can y'all hear the music? Here, I gotta end this and then hold on. There we go. Let me see. It's the auto. Let me fix this. All right. Yeah, I'm still watching Snap. I'm in Snap right now. All right, is it back? It should be back right now. Hmm. All right, Palantir announced their AI platform yesterday. Snapchat moving back up a little bit here, team. So, hey, Snapchat's starting to bounce back. Again, we're gonna let it ride a little bit, see if we, make some money. I will take some more off too if I need to, though. Um, Bro, these videos are hilarious, dude. Like, okay, like, dude, these videos are so funny, man. Oh, they're hilarious. I'm not even gonna say what it is. On Twitter, some of these females are out of control on Twitter, bro. Like they know exactly what they're doing. Like I'm watching a video because I've been learning golf, right? So it's showing me a golf video, and it's like the girl in it is like, she's like, "What a perfect, well, the best part of golf," and it shows her swinging the golf club, and she's like, "This is the best part of the day in golf." But then like her skirt kind of comes up enough for you to like see it, and it's just kind of like she knows that we can see that. Like she's just trying to get a bunch of thirsty dudes on there liking up her stuff. And she's gonna act like she's just oblivious to it, but it's like everybody's like, okay, like you're gonna act like this is a golf post. What it really is you kind of, causing a bunch of dudes to watch your video. That's all it is. But they're funny. It's funny because of that. All right, Snapchat is up. And listen, I'm not mad. Let them make their money. Okay, I'm not mad. Let them make their money. But like, it's still funny. All right, so we're gonna take a little bit off Snapchat. I mean, we're gonna take just a small little piece off here because we can. Lock in profit. Not gonna be a red trade now. Now we'll just kind of sit back. Yeah, it's like I look at the comments just to see what the other guys are saying, and the other guys are like, yeah, like this person knows that, But like, hey, like I said, I'm not even mad. Let them do it, but All right, guys. Hey, Snapchat moving up more here. Again, I'm gonna lock in a little bit more profit and just sit on the rest. Now, no matter what, it's not gonna be a red trade. Like we're gonna be green on this trade no matter what. We're green on the day in TOS. I'll take it. All right, so AMC Ape deal, they say confirms AMC shareholders. Here's a genuine question, all right? How many conspiracy theories are we going to get regarding AMC? How many conspiracy theories are we going to get? Okay, you know how many times I've seen AMC and AMC traders and investors take one obscure part of an earnings report and use that as justification for some imminent, crazy parabolic squeeze. How many times are they going to do this? You know, at what point are the AMC investors going to be like, yo, you said this about 1,000 different things over the last year, and AMC's still at $5 a share. You know? Like, at a certain point, the more I see it, it's just kind of like, how many people fall for this? You know? Yeah, if you want to watch me on Twitter, at Beginner Trades. Yeah, Snapchat's going up because it dropped 20%, more than 20%, and 10 minutes. And so again, I'm there to buy it up when it happens. And again, we're green on it. It's not going to be a losing trade at this point. Every single time, dude. Every single time they fall for it. You know, Adam Aaron's like, hey guys, you know, the ape divvy's the greatest thing ever. You know, 8 months later, he's like, getting rid of the ape divvy, the greatest thing ever. You know, will he still have a job in a year is my question. Will he still have a job in a year? I don't know. I really don't know. If they still have the squeeze theory in their head. Yeah, because Cramer's not the CEO of a publicly traded company, though. So Cramer can make as many wrong picks, wrong predictions, you know, all that stuff. Listen, this is how you know there's trouble. Is that Cramer literally was correct about AMC. So if Jim Cramer is right about your company going down, you know it's a struggle. You know. If Jim Cramer's right about it, whew, y'all got problems over there. Capital One, huge miss for their EPS. Huge miss. All right, so Fed Jerome Powell admitted he took a call with Russian pranksters pretending to be the Ukraine president. All right, guys, again, Snap pulling back a little bit. We're going to be green no matter what. The question, again, is do I hold it break even now, or do I cut it for a little bit of profit, or do I add to it on the dip? Yeah, we're going to stream the 4 earnings call right here. Last ER Snapchat was down from 10 to 8, came back to 10. Yep, I bought that dip too. You want to see how much I buy Snapchat dips? It's not really that much. Let me see. You'll notice like a trend here in the Snapchat dip buys. Like, look at my Snapchat dip buys here. Look at this. Look, my point is when Snapchat dips, one thing that you can see is that we buy those dips. Like we're buying those dips. Again, we're not just talking here. We're actually buying those dips up. And again, we made a bunch of money on Snap, to be honest. So we'll see if we can today. All right, well, you'll be able to watch it right here, Jaden. What's your take on Pinterest? I don't like Pinterest at all as a publicly traded company. I think there's tons of risk in Pinterest, specifically monetization problems. I know Pinterest has a lot of users too, but I think in terms of relevancy, Pinterest is kind of fading away, where Snapchat might not be. Yeah, I already bought Snapchat dip and took profit already, Matt. And then we're holding a little piece of it left to see what happens. But yeah, you'll be able to watch the full earnings call right here. And again, hit the sub button, hit the notification bell. We appreciate it. Yeah, what are y'all doing? Do y'all think real estate's a good buy right now? All right, so again, let's see what Snapchat does. Amazon sent out 118s. Yeah, Snap. All right, guys. So yeah, Snapchat pulling back. Amazon still moving back up under 120s though. We'll see if it actually holds. Again, we'll see if it actually holds. SPY up to 412.60s. And again, I thought we might have been a little bit extended heading into this. So I really did. I thought we might have been a little bit extended heading into this. So they had this TikTok, this crypto TikToker. He said, if you really want to be prepared for the next crypto bull run, you need to first of all get a personal loan. Do not do this. Get a personal loan, go out in the open, get a 0 interest credit card for 24 months, max that out, buy as much crypto as you can, put it all in Shiba Inu, wait 2 years. Wink. Boom. What a... Bro, I don't know how many people I saw coming to my stream when the Shiba Inu stuff was coming out, talking about how Shiba Inu was going to be the next greatest thing. Again, if there's a lesson, if there's a universal truth in stocks, it's that trading is not a get-rich-quick scheme. Trading any security, any investment vehicle, it's not a get-rich-quick scheme. Can you get rich? Sure, but that's mostly from luck. All right. If there's one theme, it's like, do not get caught up in these ridiculous movements. You know, you could be bullish in crypto. You could be bullish in the S&P 500. You know, you could be bullish in blue chips. Do not fall for the, hey, you're going to get rich if you spend all your life savings on X. Do not fall for that. That happens so much, man. I see so many people get wrapped up in this. It happens all the time. And again, it's just kind of one of those ridiculous things where so many people get wrapped up in it, man. So many people get caught in it. You know, and it is what it is. Yeah, there's just so many of them, bro. I've seen, name the biggest investment scam you've seen over the last couple years. Again, I don't know what the biggest one is for me, man. Again, I don't know what the biggest one is for me. I've seen so many of them, though, man. There's been so many of these things over the last couple years. Like, what do you guys think is the biggest one? Again, I really don't know. There's so many of them, though. There's so much sketchy stuff that's came out over the last couple years. Again, there's a lot of penny stocks that I've seen where people were literally shaming me if I didn't like it. Like, if it was like, one of them was SOS. Let's take a look at it now. SOS at 420s, 430s. I'm pretty sure it's been split to hell and back, though. Yeah, so this was a reverse split. This was at 16 cents prior to split. And so it's not like this isn't a strength gap up. This is a weak gap up, because what this means is that the company had to reverse split just to stay listed because they were at 16 cents prior to that. Another one was BBIG. Bro, this one had so many people pumping it up. Like, oh, BBIG to the moon. Vinco Ventures, BBIG. You know, what's another one? There's so many of them, to be honest here, man. I don't even know about Shiba Inu now. Prague? Oh, yeah, I heard about Prague, too. Prague is kind of flat, though, you know. DWAC. Oh, yeah, dude. DWC. Again, this one had so much hype. Political drama and nonsense, dude. Again, terrible company, of course. They don't even sound like good bets, though. Like, I know I'm on YouTube, so I've got a certain level of bias in like YouTube's favor, of course. But like these up and coming video apps, it's gonna be so hard for them to succeed, you know. Mullen, oh yeah, Mullen, dude. I try to tell people Mullen, bro. I've been like, hopefully people can respect it. Like I'm hopefully at least like I get some fans from calling these stocks out, and I've been calling this one out for like a year straight. Hopefully people start to respect what I'm saying instead of just acting like I'm some big hater, right? Because like that's the go-to move. Like, oh, this dude's just a hater. It's like, yeah, I'm a hater who's been wildly correct about everything I'm saying. And again, like hopefully people at least start to learn what I'm talking about here. Like again, Mullen, up and coming EV brand. Nobody's ever heard of it. If you've never traded stocks before, you are never going to be buying a Mullen vehicle. Best case scenario is it gets bought out by one of the big boys. Yeah, BBBY as well. Same thing, same concept. There's just so many of them. JAGX, yeah, 100%. Look at this, 37 down to 50 cents. CEI, oh yeah, that was a big one too. $44 down to $1.30. And again, I want you guys to understand, like, I'm not hating on you if you lost money in these. A lot of people lost money in these. What I'm hoping you guys learn from this, though, is that putting your money into really speculative penny stocks is never going to be a right move most of the time. Like investing into these companies, like you might think they're cheaper and so you have to invest in them. You don't. You can buy 5 or 10 shares of Google or Amazon or Apple or Disney or whatever it is and probably make money. You know, investing. You know, most penny stocks are going to have trends like this. They're just going to go straight down. And so, yeah, just be careful. tanker company, was it Dry Ships, DRYS? That one's out of business now. There's a lot of these too. MVIS is another one. MVIS, same thing. Cloudflare. Yeah, but Cloudflare's a mid to large cap stock. So like this is a real company. It's just struggling. Lucid, Fisker. Yeah, they're bouncing up a little bit. Yeah, the NKLA rolled the EV down the hill. Look at them now. This is my point. Is like, look, man. If I'm shorting stuff, and I say this all the time, but like if I'm shorting stuff, it's not going to be Disney or Amazon or Apple. Like that's crazy. Those are going to go up long term. They're obviously going to go up long term, right? If I'm shorting something, it's going to be like mid caps, like Peloton or BYND or this. You know, like that's what I'm shorting if I'm going to short something. And again, I don't really short them anyway, but again, I don't know how people get behind shorting blue chips like it's some type of big profitable endeavor. Like again, y'all understand like the market's going to go up long term. I've had people arguing with me every day about how the stocks that have gone up weren't going to go up in terms of Apple, AMD, you know, Amazon, Disney, Google, Microsoft, you know, but yeah, it's a GameStop. We're lagging a little bit, guys. I think we're back though. Yeah, we lagged for a second. Hopefully we're still okay. Getting a little bit of lag here. Yeah, we're gonna stream the forward. He's called Tyler. Hey, thank you, Dave. Nice. Yeah, we're back. We lagged a little bit. What's Snapchat doing? All right, so Snapchat's still consolidating down there towards the lows. That's all right. I'll give it time. Again, we're holding a little piece of this now, but we already took profit on it. So, will the Fed ever just make it a fair playing field? What do you mean by that? Cool. Like again, I want you to understand something. Is that that's why I watch your channel, because you're realistic with your projections. Hey, thanks, man. I appreciate it. Yeah, I mean, I want you to understand something. Is that one of the biggest things that you see regarding the stock market is that you see influencers pumping up these very sketchy, obscure companies. Yeah, again, look at the Wolf of Wall Street quote regarding penny stocks, which is, and again, we talked about this yesterday, the day before. I'm going to talk about it every day because, again, my job is to protect traders. But like you see people pumping up these really sketchy, obscure companies. And again, the Wolf of Wall Street described them as selling garbage to garbage men. Like basically like the working class people are the ones getting taken advantage of by these people pumping up these really shady companies. Like in the Wolf of Wall Street, it was Aerotine International. You know, it's the same concept. It's the same logic. And I want you guys to see the parallels there. But what happens is like they pump up these terrible companies, and these companies are not really making consistent income. Their margins are not good. They're obscure. They're small. The CEOs a lot of the time are just trying to pump the stock up, sell it, and get rich and ride off into the sunset. And so what they'll do is they'll pump up these stocks and they'll act like they're sure things, you know. And then when the stock drops and the long-term chart looks like this, you know, when the long-term chart starts to look like this, you know, and when this is the long-term chart, then at the end of it, they'll say, oh, well, it would have gone up, but the big guys are manipulating us. You know, the big guys, the hedgies, they're the ones doing it. It's like, no, like they're just betting on weak companies. But these companies aren't failing because the hedgies, You know, if the company was making boatloads of money in EPS and sales, I promise you would hear about it, and the stock would probably go up, right? But these companies are not doing that. They're not making money like that. It's not the hedgies keeping them down. Like, that's just what the people who pumped them up are telling you to justify the stock failing and them being wrong about it. It's kind of like, again, we've used this analogy many times, but it's kind of like Scooby-Doo. Like, it would have gone up if it wasn't for these pesky hedge funds. And it's like, no, man, these are garbage companies. They're terrible companies. Like, they're obscure, they're small, they don't really make money, and if they did, they'd probably be going up. And so it's really easy for somebody who's been pumping up a really obscure, sketchy, low float penny stock to say, hey, it would have gone up if it wasn't for the big man keeping us down. But like, that's not what's going on here. Like, what's going on here is these are just terrible companies. Again, they talked about them in the 80s in the Wolf of Wall Street. Like, you're going to have people that are trying to sell you on these companies. Most of the time, they're people who are losing on the trade as well, right? So it's like, if you can't stop yourself from gambling and you put 10K into a really obscure, sketchy stock, it might be comforting to say, hey, look, it's not my fault it's going down. Like, this is just the big guys trying to keep us down. And I'm not saying there's not manipulation. Of course there's manipulation. But again, big money is always going to have a little bit better of a influence over stocks and everything, really, than small money. Like, that's a universal truth. And there's nothing you can really do about it, you know? But, like, you got to call a spade, and you got to just be careful. Yeah, OCGN, I remember that one too. I heard that not many young people are using Snapchat. Snapchat grew their daily active users grew 15% to almost 400 million. TJ. So I mean, I don't know. I don't know how many young people are using Snapchat, but we'll see. Any thoughts on OCGN? OCGN's another terrible, obscure penny stock that a lot of people hyped up and pumped up a couple years ago like it was the greatest, and it's got a huge long-term downtrend. It's also been split many times, diluted. It looks like they've sold shares many times, I think, actually. So, yeah, it's just a really sketchy, obscure penny stock. I think this is actually a biotech stock. And so, again, it's just not a good company, in my opinion. Yeah, but they're never going to, there's no way to level that playing field cool. You know, like, big money's always going to have an edge. And that's with anything in life, you know, investing in stocks, real estate, you know, like if you want to buy a house, you know, a cash buyer is going to have a huge edge over a mortgage person. You know what I mean? And there's nothing you can really do about it, you know? So it's just kind of like, you got to understand it and try to make big money yourself. Like, that's what you got to do. You get SPY loving life today, man. Huge rips. Any other? No. So most of the numbers are out already. Right now we're waiting for the earnings call. ARK Invest. ARK is I think some of the companies will be fine long term. I don't know about their entry short term, but again, time will tell. What is CC? Oh, if conference call is good, how high do you think Amazon will reach tomorrow? I don't know. Like I said before the release, I think Amazon's a little extended on the upside. Again, they've been pushing up a lot over the last couple of days. Their PE ratio is really high. And while they did beat on everything and have good guidance, again, I thought they were a little extended heading into this release. And so I'm not sure. Is it true to buy every dip on large caps? Of course not. You don't buy every dip in large caps. No, of course not. You got to be a little bit more selective. You can't just buy every single one. Again, the ones I buy, and again, I don't know. Maybe I'm wildly wrong about everything. But again, the ones I buy are ones that, like, they're established companies. You know, like Disney's been around for a century. You know, so like if it pulls back to mid 90s, you know, and it looks weak for, you know, 4, 5, 6 days in a row, that's when I'll start buying it. And that's what I did yesterday. I saw, again, if you look at if I can show you the Disney trade. And again, right now in Disney, we made a couple hundred doing it. So it's not like some ridiculously huge win or anything. We made a couple hundred. We made 180 today, and then we made a little bit yesterday, I'm pretty sure. But like, if you look at the actual trade, again, if you look why I bought it, let me put up a 20-day chart. So yeah, if you look at when I started to scale into this thing, you know, I started to buy it up here, added some more down, added heavy size down here. So like once we had that big red day, I added at 96s. So I added right around here. Again, understanding that like the prior 1, 2, 3 days, we dropped from 101s all the way down to like 95. So we dropped pretty big percentages there. And again, I can't guarantee anything's going to work. Nobody can, of course. But like that's why we do it, is because like once we start to identify extension on a blue chip, even if Disney dropped to like $90, I'd still probably sit on it or maybe add to it. Because again, I understand that like Disney long term is going to be over $90. It owns so many digital assets like Star Wars, Marvel, ESPN, Disney World, Disney Plus. Like it's diversified. And so point is, I'll sit on it for a long-term investment if I need to. And that gives me a really unique position because I have a large enough account where I can just kind of wait. And I know a lot of people don't have an edge like that. And so again, I don't really want people to copy me because, you know, a lot of people are not going to be able to lock up their money for as long as I'm willing to. But generally I don't have to. Like generally, like I'll buy these dips and within a day or two, I can take some profit, and which is exactly what I did. I'm already out of it now, but and Disney's up to 100. Anchorman, Paul, love the movie. Yeah, I'm not buying a 1 minute dip. Anybody think FRC will make a comeback? It might, but I'm not betting on it. Yeah, tops is what you're referring to. I think TOPS, George. Top ships. I remember this one. Again, I've traded for every day for years and years and years now, so I remember a lot of these stuff. Oh, maybe you're talking about TOP. Oh, this is what you're referring to. I was talking about top ships, which is the sketchy penny stock. Look at TOP here, guys. This is the latest pump and dump, I think. It's never going to hold these gains. It's at $7. It went from $7 to 40 in less than a day, and now it's all the way went all the way up to almost 50. What's the reason for this? If there's no catalyst, this is never going to hold. Okay, so traders are circulating an article in China's Sina dated April 25th titled Financial Group Additional Insurance was approved by the US SEC. Okay, so this is a pump and dump, almost certainly. Overseas company. Again, I don't trust this thing at all. There's no way I'm touching this. Just be careful. This is where a lot of new traders don't have the discipline and they lose money. All right, and what I mean by that is like a lot of new traders, they can't help themselves. They see this and they just have greed in their eyes and they're like, oh man, I got to buy it up. I got to buy it up, right? A large majority of the time, this is going to give back almost all of the gains within a week. But shorting this also comes with its own, degree of risk here. So I wouldn't do that either, in all honesty. Again, I don't know what to do. Again, not an investment professional, not liable if you lose, be safe. But yeah, this is where new traders get greed in their eyes. And maybe some of them make money doing it, but I'm not touching this thing, man. Again, I would rather slow and safe gains than big gamble risks. Yeah, top crazy. What's going on with net earnings? Let me look it up. Hold on. Net posted better than expected EPS. And, all right, so it looks like EPS and the conventional metrics like revenue were fine. So this is probably guidance related, I'm assuming. Okay, so no, their fiscal year 23 adjusted EPS guidance was way better than expected, 34 to 35 cents versus 16 cents expected. Okay, so yeah, their revenue guidance came in low. Second quarter adjusted EPS came in high. Revenue guidance all the way around came in low is what happened. So their revenue guidance was light. They also said, quote, Despite the continued reacceleration of our new pipeline generation and sustained high win rates and renewal rates during the first quarter, our guidance assumes these external headwinds will persist through the end of the fiscal year, end quote. And that was from Cloudflare. And so that's why net is dropping as much as it has, is because their guidance, their short-term guidance is bad, but their long-term guidance is actually good. So like maybe a dip buy is, arguable here. Again, I'm not doing it. Y'all be careful. Again, I have no idea what it's going to do. Not an investment professional. Certainly not forward-looking statements. But yeah, I don't know. Maybe there's an argument there. Yeah, no worries. All right, guys. So again, we still got about 30 minutes before the actual earnings call. Yeah, definitely top 3. I thank you, Serdar. Google drag it down a little bit. All right. Bounce it up a little bit, guys. On net. And again, maybe there's an argument for net. I don't know. Anyway, play top. What did Amazon's earnings come out like? Amazon did better than expected on EPS sales and guidance. And they ripped up. They gapped up pretty strong. Dragged the market up with it some. Yeah, we're still in Snapchat. Small trades. I know their earnings were very good. No, I didn't play net. I bought a little bit of Snapchat. After the dip, we already took profit though. Average price is 810, so our average price is way down here. That's our average price right there. All right, guys. So yeah, we're just kind of sitting back here. We got less than 30 minutes before the Amazon actual earnings call starts. And again, stick around. Snapchat's still trying to bounce back. Again, I'll probably let Snapchat sit, I'm guessing here. And we'll give it time. Again, maybe 9. We'll use 9 as like a profit target. Again, Amazon pulled it back to 116s here. Again, I would say like sometimes I'd buy these dips, but again, I just don't trust these enough because Amazon's just up so much already that like I just don't know if I trust that dip buy yet. Maybe there'll be something good, but again, I don't know. There might be an argument there, but again, don't know. All right, so we got some votes here this morning, and again, I think that if GDP data showed us anything, get 840s here. We'll see if that holds. When is the earnings call? The earnings call is at 4:30 or 5:30, I should say. So yeah, a little bit late. Yeah, I'm gonna join the weight room for a second here. There we go. Yeah, Snap earnings call is live right now. I'm not gonna stream it just because it's too much. It's too much back and forth if we stream Snapchat. We could watch it and we'll see how they do. I'm holding Snapchat, so we'll see if we get any type of movement from this. Again, y'all give me a follow on Twitter at Beginner Trades, guys, if you haven't already. At Beginner Trades. All right, 840s for Snap. Amazon at 117. So back up a little bit for Amazon. Again, let's watch this low right here. This low might be interesting. Let's see if it actually holds this spot. This low right here. Man, I'm hungry. I gotta eat in a second. I'm not trying to talk you into anything on Snap. Don't copy me. Pinterest is already out with their numbers. Is day trading the SPY or NASDAQ more effective than individual stocks? I mean, not necessarily. I mean, it varies, man. I mean, you're acting like it's a for sure thing either way. You know, like some people, it's more nuanced than that. Like it's not just good, bad, yes, no, better, worse. Some people are going to trade the NASDAQ futures contract better. Some people are going to trade the SPY better. Some people are going to trade SPY options better. I don't like options because, again, they're less liquid. You can't trade them during pre-market, and a lot of crazy stuff can happen in pre-market. But like if you have a small account, sure, trade options if you need to. But again, shares are just safer. Because again, I can sell shares whenever I want. Options, I have to basically wait until 9:30 in the morning to cut it if I need to cut it. What is all the crazy news comes out in pre-market? All the economic data comes out in pre-market. All the earnings report comes out in pre-market and after hours. And so in that regard, you know, only trading options there is risky, in my opinion, too. But again, it depends on how you look at it. All right, we got Doug Polk versus Berkey versus Nick Airball. All right, so the Amazon CFO says we've seen consumer shifts to lower priced items, still seeing step down in discretionary spending and cloudful impacts in Europe starting to ease, and advertising is still seeing strong growth. North American customers looking for value and putting off some discretionary purchases. So kind of mixed sentiment there. Jeff Bezos once said, "You can be grinding for 4 years with no results, and in the 5th year become the biggest thing on the planet. The power of not giving up is real." All right, guys, again, look at the bounce back in Amazon here. So Amazon held 116s, 117s, starting to rebound. So is Snapchat here. SPY still looking pretty solid. Again, look at Amazon with the big bounce back here. We got about 17 minutes until the actual earnings call. Oh, I'm hungry. Yeah, I love baseball. What would you say is an acceptable weekly return on a small account with, say, $5,000 day trading? Well, I'm going to put it this way, Bo. I think that with an account that small in day trading, you're not going to get much done. And so you can either take two different strategies with it. And again, understand that like one of the strategies is high risk, right? You could try to roll that 5K into 15K gambling, but understanding you'll probably lose it. Or you could take the slow and steady approach. If you got about 5K, I would say you can shoot for maybe, I'll say maybe shoot for like that a day, so like 0.25% a day, and try to grow it like that. Shoot for 15, 20 bucks a day. So if you can make $100 on that account a week, you're doing pretty good, but again, you're going to have people that are like, oh no, I can take $5,000 and I can make $7,000 in a week from it. It's like, sure you can, but in that situation, you're going to lose the 5,000 about 90% of the time. And sure, the other 10% of the time you might be able to actually accomplish that, but it doesn't actually mean anything. And so again, the smaller your account versus the larger gains you're trying to make, the more risky your account ultimately is in jeopardy, I sold Disney like 20 minutes ago, 30 minutes ago. And again, just don't fall for it. You're going to get a lot of people that try to sell you a course and they try to act like that, they're going to see that you have 5,000 and they're just going to try to talk you into buying a course with it. Understand, again, most trading content can be found publicly available. You don't need to, you don't need to spend $5,000 on any course. Most content's available for free out there. And most of the content in those courses is publicly available content. Now, I'm not against all courses. There's some good courses, of course, pun intended. But you don't need to spend 5K on one, Yeah, like I said, if you can make $100 in a week, but that's under the assumption that you never lose, TJ. And so, you're going to have some losing days in there too. So you're not going to make 100 every week. You're going to make 50, 25, you're going to have 3 winning days, 2 losing days, and it's going to kind of be like that. So you really shoot for 25, 40, 50% a year, and you're doing pretty solid. But again, thus begs the question, which is, should you just kind of YOLO that? I don't know. Again, that's such a small amount of money for day trading. Again, try a funded account program. Funded account program, you could test your skill. If you're not good enough to pass it, you probably would have lost with real money anyway. If you are good to pass it, you still keep 90% of your profit once you're funded. And again, I'm sponsored by one, so I'm biased in their favor. It's called Top Step. These futures, there's no PDT rule. So you could day trade a futures account with no PDT rule, instant settlement, shorting ability, and you can essentially day trade the S&P 500. But again, it can go against you quick if you want to try it out with less risk. Top Step is my sponsor. You can look at the link in the description and get 20% off. But yeah, if I had 5,000 and I had to day trade, I'd probably trade futures. But everybody's different. Yeah, thanks, David. All right, guys. Yeah, we're waiting here. Again, the actual earnings call starts in about 13 minutes. And I didn't realize, honestly, I'm honestly really excited though, dude. Like, I have been streaming for 7 hours a day, every day this week. It's been a ridiculous week. I'm tired. It's been great. It's been very profitable for me to do so. Of course, the channel has grown, in a lovely way, and we appreciate everything, of course. But man, I'm tired. Monday we did FRC. Tuesday we did Microsoft. Wednesday we did Meta. Thursday, today we did Amazon. Tomorrow morning we've got oil earnings too, as well as tomorrow we got PCE data, which is very relevant. Tomorrow we got Exxon, Chevron, Colgate, Charter, and that's basically all the big ones, you know. But we have PCE data tomorrow, which is very relevant. Again, subscribe. We cover all the big economic data. You know, every weekday morning we stream and we cover all the big economic data: CPI, PPI, jobless claims, retail sales, rate hike decisions, Fed press conferences, all that good stuff we cover. And so if you haven't yet, hit the sub button. We appreciate it. Better be a big YouTube check. I mean, we make money. Yeah, we make money. We make enough money to have haters, you know. No, I'm not managing anybody's account. I don't want that pressure, you know. Yeah, that's probably good. Micro futures makes sense for sure. All right, guys, 10 minutes, 10 minutes. All right, guys. Again, we're kind of consolidating, but Amazon is moving up a little bit. Snapchat, we bought the dip there. But yeah, I'm ready to just lay down. I mean, luckily, these earnings season weeks only come once, you know, for a couple weeks every quarter, and they're great for growth. But man, I'm tired by the end of the week, man. I get streaming for 7 hours. It's like people get mad at me for making money. Anytime I plug a sponsor, people are like, but it's like, dude, if y'all think I'm sitting here out the kindness of my heart, y'all are crazy, man. Of course, anybody in my situation is making money doing this. And for good reason. I mean, I'm sitting here for 7 hours, you know, today. Maybe a little bit longer than that today, actually. Yeah, all good, Chris. Yeah, no worries, man. I wasn't really talking about you. Miller time. Hey, it's moving up. Snapping herping today. Yeah, I mean, again, y'all gotta be careful betting on earnings. Like, I see a lot of people that are just gambling on earnings plays, where they're just buying big positions ahead of earnings and then hoping the earnings turn out well. Like, why ever do that? Like, that's a terrible decision. You know, like, yeah, you can make big money, but again, I think those people are gambling. No offense to you if that's you. If you feel personally attacked by this, maybe you should, because honestly, that's gambling. Buying up big positions ahead of earnings is gambling. Nobody knows what kind of earnings are going to come out. Nobody knows how the market's going to react, even if we do know what kind of earnings are going to come out. And so taking a big position ahead of earnings is incredibly risky. I'm not going to, you can buy extension after the earnings dip like I did with Snapchat. You can, buy stocks that aren't related to the earnings and then hope you get good moves. But again, the edge is so low in terms of buying up stuff ahead of earnings and holding through earnings, in terms of like, if saying like I bought up a bunch of Amazon put options today, the edge is so low that it's just gambling. Again, if they weren't doing that, they'd be putting it on red and roulette or something. Yeah, long term's fine, Adam. Yeah, long term's good, dude. You can hold stuff long term. Yeah. Hey, thank you, Ricky. Definitely top 3 chill. We will listen to you pitch a sponsor for all your great coverage. Thank you, Lacey. I appreciate it. We try. Somebody had the audacity to tell me I was not handsome this morning. I mean, honestly, I feel personally attacked here. Okay. And y'all know it's a lie. Sitting over there, they're deep down inside. They're like, man, I know John, beginner trading's the most handsome trader ever. I know he is, but like, I'm just going to tell him he's not. because he disagrees with me regarding AMC. That's all it is. That's all it is. 5 calls. Hey, good luck. No, I mean, listen. There's some trades that you could arguably get involved with. All right, one of them is taking like straddle positions. So taking the 2 opposing option contract trades, and then letting the volatility play in your favor. That's fine. Okay, I'm talking about buying 10 put options on Amazon ahead of it. Like, never do that. It's terrible. Yeah, definitely about as handsome as you, chill, Yeah, Twitch is hard though, Chris. Like, I tried playing poker on Twitch one time and I got like 10 people there. Yeah, haters gonna hate for sure. I don't think the losses wins are big enough if you take a few points from the previous trading day profit and throw it in there. Yeah, I mean, that's different though. That's not. Yeah, honestly, dude, I've had a lot of people that work with me, Chris, who, it's like they work with me and maybe they're like mods or contractors or whatever. And, like one of the big things, like if somebody mods for me, a lot of the time I'm going to get them to sign a contract, like a no-compete, like a non-compete. Because like I don't want to build somebody up and then have them compete directly with me. It just doesn't make sense. And so, I've had ones that have worked with me and then didn't want to sign those contracts. And then try to stream themselves, and they just don't get any, they don't get anybody in their streams. And I hope they do well. Like, I'm rooting for them. I really am. Like, I'm not rooting against them. But I think people think streaming's a lot easier than it is when they look at my stream and they see me have as many people as I have. Like, again, it's really saturated. Like, there's a lot of people doing this. Like, I've been doing this for years, and so, from first glance, it might look easy to get this many people. I've said it before. You get 50 people in your stream, you can make at least 40 grand a year. Just 50 people, regularly, that is. Yeah, Snap popping up. You love to see it. We got 5 minutes here. 5 minutes. Again, I'm still in Snap. I'm gonna let it ride. WKHS? No, I didn't see that, Julie. Again, I'm not a big WKHS trader though. I've watched it over the years, but yeah, I mean, YouTube finance is a small niche, but what people have to understand, like my kids see like Mr. Beast and they're like, "Oh, Daddy, why aren't you getting Mr. Beast numbers?" It's like, because you make way more in finance niche relative to the views you get versus broad entertainment. Like, YouTube goes by cost per milli, right? So they pay you per 1,000 views. Like, finance channels will generally get anywhere between like 10 and 20 CPM, cost per milli. So you'll make $10 or $20 per 1,000 views. But you really, like, I make way more from sponsors, than all of that stuff. But like a general entertainment channel might make like $2 per 1,000 views, so there's just a huge difference. Like finance channels, and it makes sense because like sponsors are gonna like finance viewers are gonna have more money in general than like Logan Paul viewers or something like that, and so they're gonna pay this niche way more because the viewers are just worth more. Again, Snapchat bouncing back a little bit here. We're in Snapchat. We got 4 minutes, guys. 4 minutes. We're waiting on the hold screen right now. Also the most risky legally. Yeah, it's one of the reasons, like, I've been very clear. I don't want to be another Zach Morris, and honestly, I've been pretty critical in that type of behavior, like pumping up low float penny stocks, front loading, pumping up low float penny stocks in Discord groups, and then selling on all the traders doing it. A lot of traders fall for that, but it's one of the reasons, like, again, if you look at what I say the most often is probably I have no idea what I'm talking about, or I have no idea what this is going to do. And I do that intentionally, and I've been doing it for years. And in hindsight, when a lot of these other people are getting charged and all this stuff, in hindsight, like, I'm glad I operated my YouTube channel this way, because again, number one, I think there's enough of that. I think there's enough trading gurus out there acting like experts. Like, I would rather just be real with people and say, hey, I'm not an expert. I'm just kind of reporting stock market and economical data. And I think that's a much more rare thing than somebody trying to be like, yo, I made 20K last week, buy my course, join my Discord or whatever it is. Snapchat started to bounce back, guys. We got about 2 minutes left until the earnings call starts. Again, we'll play it when it goes live. Oh, which chart are you trying to look at? Here's Amazon chart on the right, Snapchat chart on the left. Yeah, for sure, Chris. All right, guys, a minute and a half. Finally, man, I've been waiting for this. I'm gonna go eat. I'm gonna listen to it, but I'm gonna go eat. I'm hungry. What should I eat, guys? Let me know. Again, Snapchat at 860s right now, 860s. Again, we caught the bounce back. And again, I think people understand, like, I don't think I'm a bad trader, obviously. And again, I am green on the year. So it's like, I tell you I'm not an expert because I'm not. But I'm green on the year on Thinkorswim, and I'd get in trouble if I was lying about that. But I'm 100% green. I'm not up 100%, but I am certainly green on the year with my day trades and swing trades on Thinkorswim. So point is, I don't think I'm a bad trader either, but I'm certainly not an expert. I'm not giving out stock picks. We got less than a minute, guys. Less than a minute. Chipotle. Yeah. Honestly, I like Chipotle. All right, 40 seconds, guys. 40 seconds. Yep, chill. I did the exact same thing. Still in it. Took profit already, though. I'm only holding about like 30% of the position, original position left. All right, guys, I'm going to mute the music and then get ready here. And all right, so we're still on hold for Amazon. All right, guys, waiting here, guys, waiting. No. No, I don't watch them. I don't really know them like that. Uh, just because I don't want to post other competitors, I'm just going to delete that. All right, guys. Again, we're waiting on the call right now. They haven't started the call yet. We still got some really, really, really cheesy hold music. In terms of voting on whose hold music is better over all these earnings call, I would go with Tesla. It's probably a little bit better earnings music than this. All right, here we go.
Good day, everyone,
Sound check.
and welcome
Sound
to the
check.
Amazon.com first quarter 2023 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question and answer session. Today's call is being recorded. For opening remarks, I will be turning the call over to the Vice President of Investor Relations, Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q1 2023 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsowski, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2022. Our comments and responses to your questions reflect management's views as of today, April 27th, 2023 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce and cloud services, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements.
Jack's teeth are
It's not
kind of blowing
possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance.
What about
And
fruit?
now I'll turn the call over to Brian.
Thank you for joining today's call.
I'm hungry.
As Dave mentioned earlier, I am joined today by Andy Jassy, our CEO.
So you're
Before we
leaving
move on to take your questions, I'll make some comments regarding our
sorry,
Q1
guys.
results.
Hey, sorry, guys. I
Let's
just
begin with
realized
revenue.
my
For the
microphone-
first
my bad,
quarter,
I'm
our worldwide net sales were $127.4 billion, up 9% year over year, or 11% excluding approximately 210 basis points of unfavorable impact from changes in foreign exchange rates. This was above the top end of our guidance range. Overall, we are pleased with the growth that we're seeing in worldwide stores businesses, including quarter-over-quarter revenue acceleration in the international segment, which is helped by easing macroeconomic pressures in Europe. Across the geographies we serve, customers appreciate our focus on staying sharp on pricing, having strong selection, and easier and easier convenience, including delivery speeds, which continued to improve throughout the first quarter. That said, the uncertain economic environment and ongoing inflationary pressures continue to be a factor, and we believe it's continuing to drive cautious spending across consumers. This means our customers are looking to stretch their budgets further and are focused on value. We saw moderated spending on discretionary categories, as well as shifts to lower priced items and healthy demand in everyday essentials such as consumables and beauty. Third-party sellers, including businesses who elect to utilize Fulfillment by Amazon for their storage and shipping services, are a key contributor to the selection offered to customers. We also continue to invest meaningfully in brand protection efforts, including industry-leading technology, so that sellers can trust we will provide a great selling experience free from bad actors. Sellers comprised 59% of overall unit sales in Q1, up from 55% 1 year ago. We also saw strong engagement in our advertising services, with revenue up 23% year over year, excluding the impact from changes in foreign exchange rates. In particular, our sponsored product and brand offerings remain a key driver of growth as we work with advertisers to help customers make more informed purchase decisions. Our teams remain focused on delivering performance through our comprehensive and flexible measurement capabilities, along with insights that allow advertisers the ability to measure their return on their advertising spend and help them grow their business. In AWS, net sales were $21.4 billion in the first quarter, up 16% year over year, and representing an annualized sales run rate of more than $85 billion. Given the ongoing economic uncertainty, customers of all sizes and all industries continue to look for cost savings across their businesses, similar to what you've seen us doing at Amazon. As expected, customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions in the first quarter. And we are seeing these optimizations continue into the second quarter, with April revenue growth rates about 500 basis points lower than what we saw in Q1. As a reminder, we're not trying to optimize for any one quarter or year. We're working to build customer relationships and a business that will outlast all of us. Therefore, our AWS sales and support teams continue to spend much of their time helping customers optimize their AWS spend so that they can better weather this uncertain economy. This customer orientation is built into our DNA and how we think about our customer relationships and business over the long term. Now let's shift to worldwide operating income. For the first quarter, we reported $4.8 billion in operating income, above the top end of our guidance range. This operating income was negatively impacted by an estimated employee severance charge of approximately $470 million in Q1, including $270 million related to AWS. As we finalized our annual planning process and considered the ongoing economic environment, we made the difficult decision to eliminate 9,000 roles, impacting our AWS business as well as Twitch, devices, advertising, and our human resources teams. In Q1, our year-over-year growth in stores revenue and unit sales outpaced growth in both our fulfillment expense and our outbound shipping costs. Inflationary pressures continue to ease quarter over quarter, primarily driven by reductions in line haul shipping rates, as well as lower diesel fuel and electricity costs. We also built on the progress we made throughout 2022 in improving productivity in our fulfillment network through continued process and tech improvements. We exited Q4 with a good balance of labor throughout the network and leveraged that throughout Q1, with customer demand patterns remaining more stable compared to Q1 of last year. As labor availability has stabilized and inventory supply chain challenges have moderated, we're able to implement some significant structural changes to transition our U.S. fulfillment network to a regionalized model. We believe these improvements put us in a good position to improve both delivery speed and our cost to serve customers over time. We reported overall net income of $3.2 billion in the first quarter. While we primarily focus our comments on operating income, I'd point out that this net income includes a pre-tax valuation loss of $467 million included in non-operating expense from our common stock investment in Rivian Automotive. As we've noted in recent quarters, this activity is not related to Amazon's ongoing operations, but rather to quarter-to-quarter fluctuations in Rivian stock price. Turning to cash flows, we remain focused on building long-term sustainable growth in free cash flow, including our efforts towards a strong cash flow accretive working capital cycle. Our operating cash flow for the trailing 12 months ended March 31st increased to $54.3 billion, up 38% versus the comparable period year over year. Besides the cash benefit of improved profitability year over year, we've also seen supply chains easing up and made progress to improve our inventory purchasing and payment cycles, which in turn has a positive impact on working capital. Now let's turn to our capital investments. We define our capital investments as the combination of CapEx plus equipment finance leases. For the full year 2023, we expect capital investments to be lower than our $59 billion investment level in 2022, primarily driven by an expected year-over-year decrease in fulfillment network investments. We're continuing to invest in infrastructure to support AWS customer needs, including investments to support large language models and generative AI. Before we open the call up for your questions, I'll hand it over to Andy to share some high-level perspectives on the first quarter.
Thanks, Brian. I'll share a few thoughts before opening up for questions. From my perspective, I think there's a fair bit to like about how our teams are delivering for customers and the results we're starting to see. In our stores business, we've been very focused on reducing our cost to serve in our fulfillment network. As we shared in the past, given the unexpected surge in demand during the pandemic, we doubled the size of our fulfillment center footprint and largely built a transportation network the size of UPS in a couple of years. This ended up substantially changing the number of nodes and connections in our fulfillment network, and as a result, we spent the last several months not only redesigning dozens of processes to drive better productivity, but also re-architecting our placement approach and larger fulfillment center footprint to move from a national fulfillment network in the U.S. to a regional one. It means we've created 8 interconnected regions in geographic areas, with each of these regions having broad, relevant selection to operate in a largely self-sufficient way, while still being able to ship nationally when necessary. We just recently completed this rollout and are quite bullish on the early results. Not surprisingly, shorter travel distances means lower cost to serve and customers getting their orders faster. And while on the topic of delivery speed, we're really excited about our progress in providing customers more one-day and same-day deliveries and are on track to have our fastest prime delivery speeds ever in 2023. On the advertising side, we're continuing to buck wider advertising trends and deliver robust growth. I think there are a few reasons for it. First, even in difficult economies, most people still shop. And with the largest e-commerce shopping venue, we have a lot of customers that companies seek to reach. That, coupled with our very substantial investment in machine learning to make sure customers see relevant ads when they're looking for various items, have meant that these advertisements have performed unusually well for brands, which makes them want to advertise on Amazon. It's also worth noting that we're still very early in our efforts to find a way to thoughtfully place ads in our broader video, live sports, audio, and grocery properties. We have a lot of upside still in advertising. In AWS, what we're seeing is enterprises continuing to be cautious in their spending in this uncertain time. Customers are looking for ways to save money however they can right now. They tell us that most of it is cost optimizing versus cost cutting, which is an interesting distinction because they say they're cost optimizing to reallocate those resources on new customer experiences. One of the great attributes of the cloud is that you can scale seamlessly up or down as demand dictates, which is not the case with on-premises infrastructure. Customers want help finding ways to spend less during this challenging time, and given that it's best for customers long term, we've been actively helping customers make these adjustments. We've spent a fair bit of time analyzing what we're seeing, and I've spent a good chunk of time myself looking as well, and we like the fundamentals of what we're seeing in AWS. The new customer pipeline looks strong. The set of ongoing migrations of workloads to AWS is strong. The product innovation and delivery is rapid and compelling. And people sometimes forget that 90+% of global IT spend is still on premises. If you believe that equation is going to flip, which we do, it's going to move to the cloud. And having the cloud infrastructure offering with the broadest functionality by a fair bit, the best security and operational performance, and the largest and partner ecosystem bodes well for us moving forward. But we're not close to being done inventing an AWS. Our recent announcement on large language models and generative AI and the chips and managed services associated with them is another recent example. And in my opinion, few folks appreciate how much new cloud business will happen over the next several years from the pending deluge of machine learning that's coming. This past year has seen us do a fair bit of cost streamlining. As I mentioned in my recent shareholder letter, we took a deep look across the company and asked ourselves whether we had conviction about each initiative's long-term potential to drive enough revenue, operating income, free cash flow, and return on invested capital. In some cases, it led us to shuttering certain businesses, like our physical bookstores, 4-star stores, Amazon Fabric, Amazon Care, and certain devices where we didn't see a path to meaningful returns. In other cases, we looked at some programs that weren't producing the returns we'd hoped. An example is free shipping for all online grocery orders over $35 and changed them. We also made the very difficult decision to eliminate about 27,000 corporate roles. Like most leadership teams, we'll continue to evaluate what we're seeing in our business and proceed adaptively. But while we've taken several actions to streamline our costs, we've been able to do so while still pursuing the key strategic long-term investments that we believe can meaningfully make customers' lives better and potentially change what Amazon is. These are investments both in our larger businesses mentioned earlier, as well as in areas like international expansion in our stores business, large retail market segments in which we're still nascent, like grocery and business to business, allowing consumers to use Prime off of Amazon in our Buy with Prime program, entertainment, devices, healthcare, and our low Earth orbit satellite for the hundreds of millions of households, companies, and government entities that have limited to no connectivity. It's hard to predict that all of these will be successful, but only one or two working would change our business over the long term. We have a lot of work in front of us, but I like the direction we're headed and strongly believe our best days are in front of us. And with that, I'll open it up for questions.
Thank you. At this time, we will now open the call for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your handset to provide the optimal sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Thank you, and please hold while we poll for questions. Our first question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the questions. Andy, you talked about the continued optimization. Just curious, can you talk about the degree to which optimization, has been done in AWS versus what you think could still lie ahead, and when do you start to lap some of those efforts? And then also on the CapEx side, I think you said overall CapEx would be down in 23. Can you just help us understand that a little bit better between retail and AWS, and then what's required on CapEx from a generative AI and large language model perspective? Thanks.
This is Brian. I'll take the second part of that question first. On CapEx, we spent $59 billion last year, and we on our core fulfillment and transportation areas we actually are spending less year over year, and those estimates are going down. The gap or the increases in AWS and infrastructure, and we are adding more dollars to the for large language models and generative AI. So we're creating some space in our fulfillment and transportation number that is being repurposed over to AWS. We still think the combined CapEx will be lower year over year.
Just on your first question, Doug, it's hard to say exactly where we are in the process. I think that what we continue to see when we talk with customers is that they're appropriately cautious about what they're seeing in the economy. They're trying to find ways to save money, as most companies are, including our own. And we have a long track record, which we continue to pursue, which I think makes sense for customers and for our business long term, that we're not trying to optimize for a quarter or for a year. We're going to do whatever it takes to help customers be successful over a long period of time, because we're trying to build up relationships in a business that lasts all of us. And so we're spending a lot of time with customers trying to help them think of smart ways, not short-term ways, but smart ways to optimize their costs and to be able to scale up and down. And again, one of the big advantages of the cloud is that if you grow quickly, you can seamlessly scale up. But when you don't have the demand, you can give it back to us and stop paying for it. And that is not true with what you see on premises. And so we're trying to work hard to help customers with that. I think it's important to remember that customers are pretty explicitly telling us that this is not a cost-cutting effort where we intend on spending less money on technology or on the cloud. This is our reprioritizing what matters most to our business at this time and trying to reallocate resources so we can build new customer experiences that change what's possible. And so, I think if you think about, those projects, by the way, take time to build. When you're reallocating, you're reprioritizing, you're redefining what you're going to build, you got to actually go build it before you can implement it. And we're working pretty carefully and closely with customers on those initiatives. I think it's important to remember that there's still so much growth ahead of the cloud. 90+% of the global IT spend is on premises. And so if you believe that equation is going to flip, it's mostly moving to the cloud. And I also think that there are a lot of folks that don't realize the amount of non-consumption right now that's going to happen and be spent in the cloud with the advent of large language models and generative AI. I think so many customer experiences are going to be reinvented and invented that haven't existed before. And that's all going to be spent, in my opinion, on the cloud.
And our next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the questions. Andy, you've talked a lot in the letter, the shareholder letter, and on the last earnings call about driving greater levels of efficiencies in the company and also possibly returning to some of the margin structures we saw pre-pandemic and absorbing overcapacity that built up during the pandemic. Can you give us an update on where you think you are in those broad efforts to match margins versus pre-pandemic levels and strike the right balance between profitability and driving your growth initiatives over the next couple of years? Thanks so much.
Eric, this is Brian. Let me start on the financial part of that question. So I think we would describe ourselves as along on the journey and making solid progress on recovering our cost structure and getting it back to pre-pandemic levels. Andy's talked about the efforts in operations and the regionalization of our operations. We've obviously taken a hard look at all of our businesses that we're in over the last 6 to 9 months and have made adjustments there. But there's still a lot ahead of us, especially on the operational side. If you look at our operating margin in North America, for example, the North American segment, it was 1.2% this quarter. Pre-pandemic, that number was in the 4 to 6% range broadly. So it's a bit of a marker on how much upside, but there's a lot of moving parts in that number. Obviously, there's the advertising, there's investments going on for future growth, and there's the core profitability and cost structure that our operations are achieving. So making progress, working hard at it, but it's a longer road than bouncing back in one or two quarters.
Yeah, and I would just add to that we have looked pretty hard at every single one of our businesses, and I think that while it's probably most visible given the size of it, what's the improvement in the operating margin, the efficiency in our stores business, I think every business is working really hard on finding ways to be more efficient. And as Brian said, I think we're making really, really good progress on the fulfillment costs in our operations network and our stores business. But one of the things that's been interesting and frankly pretty encouraging to all of us is that as we, over the last 6 to 9 months, as the network fundamentally changed. Remember, when you go through as much growth as we went through, and you double your fulfillment center footprint, and you also build a last mile transportation network the size of UPS in a couple of years. There's a lot that you have to work on to get that as productive as you want, and we've spent a lot of time working on that the last 6 to 9 months. But some of the ways that you operated before, which worked through several elbows of the curve and scale, when they become inefficient because the network fundamentally changes, they become inefficient in a significant way. And so, it's part of what led to the regionalization effort that I talked about. But it also caused us to really reevaluate virtually everything we do in operations over the last 6 to 9 months. And we have found a lot more opportunities than we even thought were there before. So I'm pretty optimistic that we have a chance not just to recover to where we were pre-pandemic in terms of operating margin, but I think there's additional upside with some of the opportunities we've identified.
And the next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Great. Thanks for taking my questions. I have two, Andy. The first one, you talked a lot about the long-term AI and large language model potential out of AWS. I think there's a lot of discussion about AWS's competitive positioning when it comes to these tools. Could you just sort of walk us through 2 or 3 of the key points of differentiation that you think AWS offers in AI tools versus some of the competitors? And then the second one around Echo and Alexa, the neural networks may not be as leading edge of technology now with the rapid emergence of some of these new large language models. How do you think about the key investment priorities for Echo and Alexa going forward, and what's your view on ROIC around that division? Thanks.
Yeah, I'll try and answer those together because they're somewhat related. I think when you think about machine learning, it's useful to remember that we have had a pretty substantial investment in machine learning for 25 plus years at Amazon. It's deeply ingrained in virtually everything we do. It fuels our personalized e-commerce recommendations. It drives the pick paths in our fulfillment centers. We have it in our Ghost stores. We have it in our Prime Air, our drones. It's obviously in Alexa. And then AWS, we have 25 plus machine learning services where we have the broadest machine learning functionality and customer base by a fair bit. And so it is deeply ingrained in our heritage. I think if you look at what's happened over the last 9 months or so is that these large language models and generative AI capabilities, they've been around for a while, but frankly, the models were not that compelling before about 6 to 9 months ago, and they have gotten so much bigger and so much better much more quickly that it really presents a remarkable opportunity to transform virtually every customer experience that exists and many that don't exist that weren't really that easily made possible before. And so it's very early days in that space, but probably not surprisingly, we've been investing and building in our own large language models for several years, and we have a very large investment across the company. And the way I would break it out, Brian, is I would say that there's 3 macro areas in this space. If you think about maybe the bottom layer here, is that all of the large language models are going to run on compute. And the key to that compute is going to be the chips that's in that compute. And to date, I think a lot of the chips there, particularly GPUs, which are optimized for this type of workload, they're expensive and they're scarce. It's hard to find enough capacity. And so In AWS, we've been working for several years on building customized machine learning chips. And we built a chip that's specialized for training, machine learning training, which we call Trainium, and a chip that's specialized for inference, or the predictions that come from the model, called Inferentia. And the reality, by the way, is that most people are spending most of their time and money on the training. But as these models graduate to production, where they're in the apps, all the spend is going to be in inference. So they both matter a lot. And if you look at, we just released our second versions of both Trainium and Inferentia, and the combination of price and performance that you can get from those chips is pretty differentiated and very significant. So we think that a lot of that machine learning training and inference will run on AWS. Then if you think about, so you have to train the models, you have to run the inference, then but you have to build the models. And if you look at the really significant leading large language models, they take many years to build and many billions of dollars to build. And there will be a small number of companies that want to invest that time and money, and we'll be one of them at Amazon, but most companies don't. And so what most companies really want, and what they tell AWS, is that they'd like to use one of those foundational models and then have the ability to customize it for their own proprietary data and their own needs and customer experience. And they want to do it in a way where they don't leak their unique IP to the broader generalized model. And that's what Bedrock is, which we just announced a week ago or so. It's a managed foundational model service where people can run foundational models from Amazon, which we're exposing ourselves, which we call Titan, or they can run it from leading large language model providers like AI21 and Anthropic and Stability AI. And they can run those models, take the baseline, customize them for their own purposes, and then be able to run it with the same security and privacy and all the features they use for the rest of their applications in AWS. So it's very compelling for customers. And then that third layer are really the applications that are going to be built on top of those large language models. So ChatGPT is a good example of an application that's being built. We'll build some of those applications ourselves. So for instance, we think one of the most compelling applications that are going to be built in generative AI have to do with making developers much more effective with coding assistance. And so we built something called Code Whisperer, which we just announced the general availability for, where developers can plug in natural language, something like I want to build a video hosting website. And Code Whisperer will bring up the code you need and the developer needs to employ and put that in production, which is really compelling. If you think about how much more productive developers are going to be and what they're going to spend their time on instead of rewriting code that is nitty and takes time, I think it's a big deal. Now, to your second question, and it's related to this top layer I was just talking about, we're going to build every single one of our businesses inside of Amazon are building on top of large language models to reinvent our customer experiences. And you'll see it in every single one of our businesses: stores, advertising, devices, entertainment. And devices, which was your specific question, is a good example of that. I think when people often ask us about Alexa, what we often share is that if we were just building a smart speaker, it would be a much smaller investment. But we have a vision, which we have conviction about, that we want to build the world's best personal assistant. And to do that, it's difficult. It's across a lot of domains, and it's a very broad surface area. However, if you think about the advent of large language models and generative AI, it makes the underlying models that much more effective, such that I think it really accelerates the possibility of building that world's best personal assistant. And I think we start from a pretty good spot with Alexa, because we have a couple 100 million endpoints being used across entertainment and shopping and smart home and information, and a lot of involvement from third-party ecosystem partners. And we've had a large language model underneath it, but we're building one that's much larger and much more generalized and capable. And I think that's going to really rapidly accelerate our vision of becoming the world's best personal assistant. I think there's a significant business model underneath it.
And the next question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Great. Good afternoon, and thanks for taking my questions. I guess first off, on the international segments, I mean, not only an acceleration there on the top line, but also on the margin side, if you could maybe add a little more color on some of the initiatives and improvements there. And then secondly, on the physical stores, including the grocery strategy, maybe Andy, it would be worth kind of going through any updated thoughts you have there around the strategy of optimizing stores across categories, and if there are any changes to the footprint plans for those businesses. Thank you.
Thanks, Colin. I'll start with the international question. We saw a acceleration of growth on an FX neutral basis, 9% versus 5% in Q4. I think the economy there is starting to stabilize, especially in established countries of Europe. We're seeing consumer confidence has increased and inflation is ticking down. So some of those are similar to North America, but that is what we probably had some upside that we weren't counting on in international in the first quarter, and that was good strength. On the margin, the negative margin has come down. Top line is helping there, but it's also a function of some of the reductions that we're making across some of our investments. Most of those are in North America, but you'll see kind of the improvement in operational efficiency, and on the edge of some of the global programs are going to be reducing cost in international. I will remind you, again, that international is a aggregation of established countries which are already profitable and who look a bit like North America, perhaps at an earlier stage of development, and are working their way to parity on profitability. We have forward-loaded prime benefits in a lot of these countries that are ahead of the curve that we saw in North America. So happy there. We have a large emerging business. In the last 5 years, we've added more than 10 new countries. What we're seeing is, if you looked back to North America, long ago, it took 9 years for us to reach break-even profitability in the United States. We see a similar curve in a lot of countries overseas. There's, in fact, additional challenges that we usually have to deal with, things like lack of payment methods, lack of the established infrastructure for, especially for transportation, and infrastructure for the internet and everything else. So the adoption can be slower, but we feel good about the businesses we're building. They carry a lot of the same traits that we have in North America. Price, selection, and convenience are at the core of that. Very happy with the adoption and traffic and new customer acquisition that we're seeing from Prime Video in a lot of our emerging countries as well. So good quarter. Continue to work again on cost structure and growing those businesses country by country.
On the grocery part, what I would say is, we continue to progress there. We have an interesting grocery business where we've been in it for a while, and we have actually quite a large grocery business. It's just an unusual selection grocery business, very much like how the mass merchandisers got into grocery, 25, 30 years ago, where the selection are items that are not temperature controlled. So it's, canned goods and packaged food and paper products and pet supplies and personal care and health and beauty and all sorts of consumables. And interestingly, in this current environment where consumers are being cautious about what they spend and finding ways to trade down in different product variations, consumables have stayed very, very strong. And so we continue to be very pleased with that part of our grocery business. To serve a much broader number of the grocery shopping journeys, which we seek to try to help customers with, we have to have a bigger physical presence, since most of the shopping visits are still in physical stores. And we've got two efforts there. We've got Whole Foods, which really pioneered the organic grocery space, and that continues to grow nicely. And we've made a number of changes in the last year to the business that have changed the profitability trajectory there. And feel very good about that. And at the same time, it is still a portion of the overall market segment. And if you really want to serve as much of grocery as we'd like to, you have to have a mass physical offering. And that's what we've been working on for a few years with the brand we've called Amazon Fresh. We wish we were further along at this point. We've tried lots of ideas. We haven't yet found conviction around the format that we want to go expand much more broadly. We have a set of experiments and ideas and concepts that we're working on across our dozens of stores there, and we're pretty optimistic that we have something that may very well work, and we're hopeful over this next year we find that. But we continue to believe it's a big business for us today. It's continuing to get bigger, but we believe we have the opportunity for it to be much larger for Amazon, and where we can help customers more broadly. And I think having that physical presence, we will also have the ability both to be able to serve the grocery products they come for, as well as store some other pieces and help customers across some other product lines as well.
And the next question comes from the line of Justin Post with Bank of America. Please proceed with your question.
Great. Thanks for taking my question. I guess AWS, can you call out any unusual items in April or 2Q for the comp? I know you had a very good 2Q last year, and just thinking about linearity in the quarter. And then second, Andy, really appreciated the shareholder letter. It looks like you picked, medical and Kuiper as big investment areas. Do you think those? I mean, why those areas? And does the company ever think about breaking out all the big investments so we had more clarity on the retail margin structure? Thank you.
Yeah, hi, Justin. Thank you. On AWS, I think Andy did a good job of laying out the dynamics we're seeing in the among customers right now, and where they're cutting workloads, and continued strength that we see in customers hitting their contractual limits and extending them, and planning for the future. So we feel really strongly about the outlook for the business, and understand the short-term work that we're doing to help customers save money. So I would say Q2 versus Q1, there's not an obvious year-over-year comp differential. It's just, again, understanding which customers are cutting in some areas and growing in others, and helping them get on, hopefully, to the new initiatives that they are planning as well.
Yeah, and in terms of the calling out healthcare and Kuiper in my annual letter, I think what I was trying to do in the letter was explain how we think about investing and how we think about our big new investments that we make. And I talked about in the letter that we look at a few things. We look at if it's successful, could it be big and move the needle for Amazon with the right ROICs? Is that experience being well served today elsewhere? Do we have some kind of differentiation? And do we have some competence at the company in that area? If not, can we acquire it quickly? And when we'd like the answers to those questions, we will invest. Some of those investments lead to what seem like relatively straightforward investments. And I talked a little bit about category expansion and international expansion in our stores business, and some of the nascent retail market segments that are large for us that we think we can have big businesses in business to business, our Amazon business entity, and grocery, and things like Buy with Prime, which allow our consumers to use their Prime benefit in other third-party websites beyond Amazon, and also let merchants convert at a higher rate because Prime members are able to pay quickly and then get that fast, reliable shipping they get from Prime. But then there are other investments I was pointing out that sometimes don't lead to categories that people might initially guess. And AWS was a good example of that, where that seemed really different for us when we started to pursue that in 2003. And we're a pretty different company because we did so, even though there were a lot of people externally and internally that thought it was a little bit crazy. And so I just chose two of them there. I could have chosen a lot more. The letter was long enough as it was. So I just chose two, but I chose two that we have conviction about. And on the healthcare side, when you think about that set of questions that we ask ourselves when we consider whether we should make big investments, healthcare is a multi-trillion-dollar business that's very segmented and that's really broken in the U.S. particularly. I think in other parts of the world too, but particularly in the U.S. And we had what we thought were some differentiated ways that we could be successful at it. And I think when our customers have been asking us for years to provide a pharmacy, and if you think about that, it's not, that's a pretty natural extension from what we do in retail. And we launched Amazon Pharmacy in 2020, and I think it's off to a good start. It's continuing to grow. We have a lot to do there, but a lot of our customers who like that experience said, "Gosh, I wish you guys would help us in the broader healthcare experience." And if you think about trying to meaningfully change that experience, primary care is right at the center of it. And if you look at the experience that's been the case for the last several decades, we're going to have a hard time convincing our grandkids that it used to be the case to get a primary care appointment. You had to call ahead of time, a month ahead, to schedule an appointment and drive 20 minutes to the doctor and park and get into the facility and wait 20 minutes in reception. Then you get into an exam room, you wait 10 minutes for the doctor to come in. The doctor talks to you for 5 minutes and then prescribes you medicine where you drive 20 minutes to go get the medicine. That experience just doesn't make sense and won't be the case. And so, we looked at, we had some experience when we started experimenting with Amazon Care, and we couldn't believe how much people liked a streamlined experience. And we ultimately decided we didn't have the right business model there, but we came across One Medical where, the digital app is very compelling, and you can talk to a medical practitioner by chat or by video conference, or if you have to come into a physical facility, they have clinics, around the country, and you can get that appointment same day or next day. And all those cities, they have relationships with health specialists where you're plugged into their ability to get reservations, where you can get reservations in a day or two there. And then when you need medicine, you can have it automatically shipped to you by Amazon Pharmacy or other third-party pharmacies. It's a very, very different experience. And we think we have an opportunity to be successful in helping change that experience. And if we're successful with primary care and with health and with pharmacy, there are a lot of other things we can help customers with as well. So we think that's a big opportunity. And I'll just briefly say on Kuiper that, it's a very large number. It's hundreds of millions of households and businesses and government entities that today have limited to no connectivity to the internet. And if you just think about what you can't do if you don't have connectivity, we all take it for granted. But having that connectivity means you can take online education courses and get an education, or you can start or run a business, or you can enjoy entertainment, or you can shop for anything you can imagine. And for businesses and governments to be able to have that coverage, to be able to operate much more seamlessly in the various environments in which you have to have a presence, it's a total game changer. And so we think it has the chance to be a very large business. We haven't, we've released some information about it and some of our designs, and it's pretty exciting to us how many customers, in all those different segments are excited about it. And so I just chose those two as exemplary of some of the inventions that come out of that investment process that you might not guess, but that we think can be very significant for the company.
Thanks for joining us today and on the call and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
All right, guys. So that is it for today. That is the earnings call. And again, we'll see what happens today, guys. Amazon is trying to move up. We are going to be doing a crypto show, so don't go anywhere. Guys, don't go anywhere. We are going to be doing a crypto show. Again, if you haven't already, check out Top Step. If you want to day trade, most pro traders trade futures. And they trade it because there's more liquidity. You can trade currencies, you can trade commodities, and you can essentially trade the NASDAQ or the S&P 500 with no PDT rule. If you want to try out that market, Top Step is the most legit futures funded program in the world. They pay out millions, fund thousands of traders a year. Here's the link. Check them out. And again, as soon as we close down the stream, literally as soon as we close down the stream, we are going to go to a crypto show. So if you haven't already, again, it's beginnertrading.net/crypto. I'm going to post the link to the crypto channel that we're going to be on right now. Again, it's youtube.com/beginnercrypto. We are going to be going to our crypto show, and I'll see you guys in just a second. Again, here is the show that's about to start. Again, since if you're on mobile, sometimes it doesn't redirect you there. And so if you're on mobile, sometimes it will not redirect you there. So again, let me see if it does or not. Let me make sure it does. But yeah, let's go ahead and get started, guys. Here's the link. Again, and we're starting the show right now. Good luck. We'll see you guys over there. There's the link right there in chat. Also, youtube.com/beginnercrypto is the name of the channel. And yeah, we'll see you guys over there.